Hey guys, good morning, welcome to the live session of Stocks Network Trading. My name is Dave, guys, my partner is Ron. Let's get down to business here, guys.
In on US 30, sell, okay? I'm jumping in. Guys, that's a 100 pip drop. Yes, we caught it. Hey, guys, 200 pips, please, secure.
Hey, good morning, everyone. Welcome. Thanks for joining. We're going to get started in just a couple minutes. I hope everyone's having a great start to the day. We've got some US red folders coming up today. Flash manufacturing, flash services, I believe at 9:45, right when Wall Street market opens. So we'll talk all about that. We'll trade through that. Just practice proper risk management, guys. And let's see what the markets have in store today. How's everyone doing? Watching that. Wasn't the greatest earnings. They're down in the pre-market right now.
Hey guys, good morning. Welcome to the live session of Stocks Number Trading. My name is Dave, guys, my partner's Ron. Let's get down to business here, guys.
Big drop.
In on US 30, sell. I'm jumping in. Guys, that's a 100 pip drop. Yes, we caught it. Hey, guys, 200 pips, please, secure.
Welcome, guys. Let me just hit the record button and let's get started. Let's get this show on the road.
Recording in progress.
Okay, welcome everyone. Good morning. Thanks everyone for joining. It's almost 7 a.m. Eastern and it is Thursday, July 24th. Wow. So I don't know about you guys, but this week is flying for me. I can't even believe it's Thursday and tomorrow is Friday. So if the week's, if it's going by fast for you guys, it is for me. I thought it was Wednesday when I woke up today, to tell you the truth. And then I looked and it's Thursday. I'm like, oh shit. So guys, welcome. Thanks for joining. Plan for today is, what we're going to do is, so our live session is going to kick off with a quick review of the top stories from Forex Factory. So we'll go over today. There's a lot of flash manufacturing, flash services, red high impact folders today. We'll go over earnings whispers. So yesterday in the after hours, we had Tesla and Google report. We'll see who's reporting in the pre-market and the after hours today. And we'll focus on major companies releasing their earnings in the pre and post market trading that could impact today's markets. After that, we'll do what we normally do. We'll shift into a top-down analysis, starting with gold. And then we'll watch it going through COMEX, and then we'll analyze price action and key levels on it. Then we'll transition and we'll move into the U.S. index, specifically US 30 and NASDAQ during the Wall Street hours, and that's when we have red high impact US news at 9:45 today. And to identify some potential trading opportunities based on the current market conditions. If we don't find any setups during the Wall Street market open, maybe the top down will help you guys throughout the day in the post New York, and then Dave will be coming in and picking that up, and hopefully you can have a good trading day. And guys, as always, doesn't matter who you are, okay? Myself, Dave, and you guys. Remember, always trade with proper risk management. If you reach your daily trading goals, it's wise to stop trading and enjoy the rest of your day. So the most important thing about trading is to stay disciplined and stay focused, okay? So I need this reminder just as you guys need this reminder every morning. You know, when we're drinking our cup of coffee, let's read this 3 times and make sure we know. Always use proper risk management when you're trading. If you hit your goals, get out of the markets so you don't give back. Okay, the point of trading is to hit your daily goal, and that's it. It's not to become a millionaire today. It's not to break the banks today. Our job as traders is to hit our realistic daily goal, 0.5%, 1%, 50 pips, or 100 pips, whatever it is. And once you hit it, which you can do on a consistent basis if you do use proper trading strategies and you're patient and you're disciplined and you use proper risk management, you can very well hit your daily goals and weekly goals and monthly goals. But always stay disciplined and focused. Okay. So with that being said, we're going to get started with Forex Factory. As you can see, it's been a very busy day news-wise, a lot of red folders. When we started this on Monday, we said that Thursday is going to be the big news day. It was pretty light Monday, Tuesday, and Wednesday. And today it's very, very, very heavy here news-wise. So we had coming out of Europe, 3 a.m. You guys all know that that's when the London market opens up. We had French flash manufacturing and French flash services. Then at 3:30, 15 minutes later, we had our German manufacturing, German services. Then we went into the Eurozone. Then we got our UK, our British manufacturing and services PMI coming out. We had also had the European, this at 8:15. Our refinancing rate is coming out in Europe. So you can see that they're looking to pause is the forecast. 2.15 was the previous, and this is not an increase or decrease in the forecast. It's a pause. We'll see what the actual number is here. So if you are trading the euro, the pound, anything to do in Europe, any currency in Europe, this could in fact create some volatility. So keep an eye on that. And that's at 8:15. That's just prior when we're walking into COMEX over here. And then 8:30, what do we have? We've got some Canadian news over here. And then we also have a US red folder at 8:30. It's our weekly unemployment claims. So these are our week over week unemployment claims. Last week, the actual number was 221,000, and they're forecasting right now an increase in weekly unemployment. So from last week to this week, in that 7-day span, they're looking at 6,000 more individuals are in that unemployment line seeking work. So that's not good. We do not want unemployment wherever you are around the world. Unemployment is not good for your currency. It's not good for your economy. It's not good for yourself, like as an individual. If there's no work for us and more of us are getting unemployed, we're going to be lining up at places seeking work and there might not be work. So that's a cause for a recession if we have high unemployment. So we want to kind of keep that down. So it's best if this number is down. That will increase your currency's strength. If this goes up, unemployment goes up, that weakens our currency that we're looking at, okay? And specifically, we're looking at the US dollar because we do trade the US stock market with Wall Street, and we do trade gold, which is heavily correlated with the US dollar, okay? So we'll see what the actual numbers are. And remember, these are just weekly claims. So these are coming in every week. It's not like a NFP, a non-farm payroll, which is coming up in the next few weeks, the first Friday of every month. This is week over week, okay? Some traders don't even put any emphasis into this. They don't really care. They just care about the volatility like on a big NFP day. But me, I watch this week over week. I watch it because I trade every single day. So I want to know exactly what's going on every single day, every week, okay? Then we start to move into New York. Our Wall Street session, you guys know, opens at 9:30 a.m. Eastern, and then right at 9:45. So you know when it could get very volatile for the first minute, for the first 2 minutes, for the first 5 minutes, maybe up to the first 15 minutes. And then look what we have at 9:45. So when our first 15-minute body candle forms from 9:30 to 9:45, then we start getting into some high impact news. 2 folders, the US flash manufacturing PMI comes out and the US flash services PMI comes out. So the first one, we had 52.9 last month on the flash manufacturing. So it's a slight decrease in the forecast by 0.2 over here to 52.7. And in our flash services, 52.9 was the actual result last month, and they're looking for a little tiny bit of an increase by 0.1 to 53. If you guys don't know what these are, flash manufacturing, flash services, if you open the detail on the folder, it'll briefly tell you exactly what it is. So it's a level of a diffusion index based on surveyed purchasing managers in the manufacturing industry. So this kind of gives us a little glimpse, a little snapshot of how the manufacturing industry is doing. In order to have good, successful economy, we have to have a thriving manufacturing industry. If we don't have a thriving manufacturing industry, we're struggling as an economy. Okay, so actual greater than the forecast is good for the currency, which we are particularly looking at the US dollar. So it's released monthly, around 3 weeks into the current month. The next release, we'll talk about this again, will be August 21st. So just note this. These are some quick notes. So it's above 50%. You know, it's that psychological level that we always talk about. Above 50. Like right now, you see how flash manufacturing, it is above 50. Last month, it was above 50. This forecast is above 50. So what does that mean? It means that the industry is expanding. It means that the industry is growing. The larger the number, 50, 51, 53, 55, 57, 60, 65, that means you have a booming industry. It's expanding. It's growing. That's good for the US dollar. That would see a strength in the US dollar. And then below 50 indicates contraction. So that indicates a slowing manufacturing industry. And that's not good for a US dollar. Okay. So there are two versions of this report released, flash and final. Why do we care about this? It's a leading indicator of economic health. Businesses react quickly to market conditions, and their purchasing managers hold perhaps the most current and relevant insight into the company's view of the economy. Okay, so that's what we got coming out. That'll be during Wall Street market open. We do have some U.S. home sales at 10 a.m. Looks like they're bumping up the forecast. 623 new home sales were registered last month, and we've got now an increase to 649,000. So if you have a thriving economy, consumer spending is doing good, you've got new home sales are up, then that can indicate that there's a good economy. And then maybe if you're thinking about like interest rates, if you have all of that, then I think it's time to start lowering our interest rates. There's no reason to then increase interest rates. Then if people are working, if the economy is thriving, people are buying homes, you know, it just put the pieces of the puzzle together. Then maybe our next FOMC, we should see a quarter basis point decrease, and that will boom the stock markets and create more liquidity in the markets. So everything, when you pull one string, the other string moves. So everything is tied together. It's just, you got to kind of follow these things piece by piece, you know, then it will start to make more sense as you get more educated on these things. It's just simple economics. It's nothing crazy here. It's not rocket science. It's just simple economics. Okay. We'll help you with this to understand all of these things. But that will be for today. Okay. And then if you're going to trade post New York or in the afternoon, you got your natural gas storage and then nothing in the afternoon. Okay. So that's for today. And earnings, we had a big day yesterday in the after hours. Tesla, Google reported, and today in the pre-market, we've got American Airlines right now reporting. This is Blackstone, not BlackRock. I see a lot of traders mistake this for BlackRock. This is a completely different company and a different name. So it's Blackstone. This has nothing to do with BlackRock, guys. They've already reported when the big banks were reporting. We got Dow Chemicals, Honeywell Institution, Southwest Airlines. So you see we have two airlines. You know, we had Delta a couple weeks back. Ask yourself, are you guys, when you go to the airport, this is what I do, guys. It helps me as a trader. It helps me as an investor. Wherever I go, if I walk into a Home Depot is a publicly traded company. I was at Home Depot for 2 hours yesterday, walking around, buying a few things, looking, is it busy? Is it not busy? Are people like buying, renovating their homes? And because if I see it busy, then I look at the share price. I look, is it good? Should I be buying now? I do this when I walk into Costco. I do this when I go into my TD Ameritrade, my bank. I do this when I fly. If I'm flying, if I go on an airline, I look at the airports. I see, are they busy? Are they dying? What's going on? This is how you can go long on companies if you see, or you can short companies if you see they're struggling. A lot of traders that I know, including myself, had some puts on Tesla. It wasn't rocket science why I had some puts on Tesla. I was looking to short Tesla during the earnings. Why? Because rewind back 3 months ago, how has Tesla been performing? They've been slumping all because of Elon Musk has been too focused on Doge and the Department of Government Efficiency, and a lot of his shareholders were getting mad, saying, "Are you going to come and come back to us over here, or we're going to not be an investor with you anymore?" So they were struggling. Share price dropped, and the earnings over the past 3 months. I saw that the sales, I walked into a Tesla dealership, sales were slumping. They were begging me to buy a car. Like they were struggling. They lowered the price tag. They reduced it substantially. And there was no one in there. There wasn't one person in the Tesla dealership. I swear I've never seen a dealership like that in my life where there wasn't one person in there. And so it kind of gave me a hint. Sales are not going to be good. So it's going to be a decrease in sales, decrease in revenue. And it's a perfect opportunity to look to short that company. So that's, guys, where you got to look forward. It's all about forward looking. So that's what trading and investing is. You're looking into the future. Yeah, I know we're trading candles today, but also you got to kind of pre-plan things for the future. That's what trading and investing is. Okay, guys. And then in the after hours, we do have a couple big names in the after hours. Intel Corporation. Okay, so if you're in the semis, if you're in the chips over here, computing, technology, Intel is a big name. They report right at market close at 4 p.m. Newmont Mining Company. So Dave and I have been talking with you guys for some junior miners. Eris Mining, Eldorado. If you saw Eris, it's up. I'm up almost 2.5–3% on that swing trade right now. So that's going good. I'm now at a break even on it. So I'm hoping to get to at least 5%, and then I'm going to start scaling out of it. So that's a nice little swing trade, holding it for multiple days to get that 5–10%, and then rinse and repeat with another company. Okay. What else we got? Decker's Brands, Physicians Realty Trust. Again, these are not those big names. Like yesterday we had Google and Tesla. Those were those big names. And right now Tesla is down 6% in the pre-market. So that could dictate the way how NASDAQ and S&P open up this morning. Okay. So we'll keep a look on that after in the market open. Okay. And in news, if you guys are in the markets, Donald Trump is in the news every single day. You got to be careful because when he tweets, markets move. So Trump signals baseline hike in reciprocal tariffs to 15%. The floor for tariffs looks to be rising from 10%, putting pressure on countries as the August 1st deadline looms. So August 1st is coming up real soon. He's extended it multiple months and weeks now. Now it's getting again to another deadline. So it's getting there. We don't know what he's going to do. He might stay firm on this. Then the markets will react next week. He may be lenient and extend this till September 1st, or just come to an agreement, whatever it is. But we got to focus on this, guys. Okay. And then yesterday, after hours, U.S. stock futures are mixed with Google, Tesla earnings in focus. Tesla stock sinks after earnings miss, a rough patch warning. Okay, so that was in his forward guidance. I don't know if you were listening to the conference call. You don't have to be a shareholder of a company to listen to the conference call. I get this question asked all the time. Ron, do I have to be a shareholder to listen to these companies' conference call? No, you can download the links. You can listen. It's publicly available for everybody. You can go on YouTube. I'm sure someone is streaming Tesla's earnings, and you can listen in and things like that. But it does give you a lot of guidance for the future. Like, is he optimistic? Is he pessimistic? What's he talking about? Is there anything in the pipeline that's exciting that he could be releasing? And this is for all companies. And that can build a little bit of hype into the next 3 months. And you could look for a possible swing trade out of that. Okay. So conference calls, forward guidance are very, very important in earnings calls. Okay, could dictate the way how the security moves for the next few weeks, next few months, bullish or bearish. Okay. Trump to visit the Fed headquarters for refurb check as he battles with Powell. So this is ongoing. This battle between Trump and Papa Powell over here. We'll see what happens with it. What else we got? Gold slips as haven demand eases on U.S. trade deals optimism. So we'll be looking at gold today. Chemicals firm Dow stock falls after bigger than expected loss. Chipotle plunges after company reports second straight sales decline. I could have told you this, guys. I went to Chipotle the first time with my kids a couple weeks ago, and I had a horrible experience there. The food was not that great. Okay, they didn't even. When I get a nice big burrito, a big one, I want it grilled. I don't want it to be soft, and then when you take a bite, everything just falls apart. I hate that. I can't stand that. So that was one of my things. Another thing was the price. Me and my two kids, I paid $60 for 3 burritos and 3 drinks. And everything I was asking is extra. They're like, do you want guacamole? I'm like, sure, that's extra. Do you want this pico de gallo? Okay, extra. Do you want this? Do you want corn? Extra. Do you want that? I'm like, what actually comes with the burrito? What am I paying for? Just the tortilla and some meat that they barely put any meat in there. So I got upset and I missed an opportunity to get a short position on Chipotle. I could have told you guys that it was ghost town in Chipotle in my town, and one already closed. So this was a new one, and I can't see it lasting for a few years. It's probably going to close down too. What do you guys experience with Chipotle? Do you guys? I know someone will say the food is great, but for that price, oh my God, I could have got 3 nice steaks and had a nice, beautiful barbecue at home. But for me, I don't like this place. That's just me. Oil prices gained 1% on U.S. trade optimism, okay, and a drop in crude inventory. So all the crude traders out there, I know a lot of you guys are watching crude oil and you're trading it daily. Jay, is it always packed in your area? Here, it's dead. It's dead in there. There's nobody in there, and it was kind of like a grand opening for this second location. And it was, I don't know, maybe it's just how costly it is over here to go get a $20 burrito. And there was barely anything in it. Like, it was just, I don't know. What else we got going on? I'm just going to screen through this. Chipotle Mexican Grill falls as weak dine-out demand weighs on annual sales forecast. Okay. So that's what we got going on in the futures market. We got S&P. Look at everything is flat. S&P is 0.02%. It's basically not even. It's just not even breathing right now. So it's just baseline. That will open up. Dow is actually down negative 0.36%. Nasdaq is up positive 0.25%. Russell is down. And gold is down almost 1% right now. Okay. So let's get into our Discord over here. We already talked about the message. Remember, guys. If you're just joining us, remember, always trade with proper risk management. If you reach your daily goals, it's wise to stop trading and enjoy the rest of your day. Stay disciplined and focused, okay? And let's just check out our signals over here. Indices, we had a signal come out at 6:30 prior to the call to look for a short position on Dow under 44,900, and it's running 80 pips. And 50 respectively over here. We'll keep an eye if we get any signals. Also gold, there's one that came out just prior to the call, looking for a buy above 33.50, 55 area, but we'll do a top down and we'll start to bring it into that area, okay? There's a free Telegram pinned at the top of channel for everyone on YouTube. It's pinned at the top. This is where you can grab all of our YouTube links. Guys, I appreciate all the comments on these sessions. I do read them, so I encourage you guys to chat in YouTube. Also, leave comments at the end of the videos, of something that you want to see, and then Dave and I will look into that and do those things. Also with you guys on Zoom, guys, in the chat, let me know in there. I read the chat all the time. So after the calls and things like that, I review everything. If there's anything that you guys want to see, any feedback, any suggestions, any ideas for upcoming education, let me know. Okay. And guys, we did a blog the other day, the importance of wicks in trading, wick analysis, long wicks, short wicks, rejection wicks, exhaustion wicks, creating higher highs, creating lower lows, what are equal highs, equal lows, all of these things. Make sure you guys sharpen up your analysis on wicks. Don't just look at bodies and volume. Also, like, I'm big on bodies and volume, But I also really take wick analysis very serious as well, because it can dictate everything. Okay. This was funny. I had to post this. Dear Donald Trump, shut the F up when we're trading. Sincerely, everyone. This was pretty funny when I read that. So, yeah, guys, this was the Eris mining I was talking about. Yesterday it was up 2.5%, almost 3%. So we'll see if we can kind of get it up to 5%. I was slowly just building 500 shares at a time for a total of 2,000. I might add more, and this was one I told you guys straight up. I'm not using a stop loss on this one. I'm going to buy the dips. I'm going to keep adding more and more positions, more shares. And then ultimately it's a gold mining security. If gold keeps moving up, I'm sure that the miners will follow behind. Okay, they're kind of lagging behind because gold is actual physical spot price of gold trading on the open markets, but the miners are right behind. Similar like with Bitcoin and the miners as well. Very, very similar. Okay, so that's what we got going on. And if you want to join SST, there is promotions over here. We love 50% off plans. Use this code SST50 at checkout on all your plans. If you want education, we've got a lot of education with myself and Dave here. Live sessions, plenty of live sessions throughout the week. And the free blog, what I was just talking about, if you click on more, you'll come over here. Here's the importance of wicks in trading. Talked about El Dorado Gold Corporation. This one is on my watch list. I've always traded this, so you guys can add it to your watch list as well. Pretty good company over here. So you can see we're focusing on gold companies right now. There's Eris Mining. This was the members only weekly outlooks. XRP hit all-time highs, weekend trading routine, all of these things, guys. These are free blogs available for you guys. Take a look at them. They take 5 minutes out of your day to go over it. They're brief. They're not intense, but maybe just get you thinking about something. Okay. Now let's get into the markets. Okay. So right now gold is in this parallel bearish channel, coming down, going back up, coming down, going back up, coming down, going back up, coming down, and coming back up. What do you notice? So when I kept saying that, I see lower high, a lower low. I see a lower high, lower low, lower high, lower low, lower high, lower low, lower high, lower low, lower high. Are we going to get a new lower low, or are we going to build maybe a second bottom or a higher low bottom and maybe physically break out of this channel? Remember that one day where we flipped that daily candle and it ran for over 300 pips? We caught that trend breakout where it reversed. Are we going to get something very, very similar today, or is this going to keep pushing down? So that's why, guys, let's start again with a top-down analysis, bring it down from the daily, hourly into these 5 minutes, and then get a snapshot of how things are moving. Okay, so what I'm going to do right now is start off on the daily, get off these 5 minutes, and then look at the daily bearish candle. Look at yesterday's bearish engulfing candle, and it's also transitioning into today's. So very bearish on the daily, if you ask me, coming off of yesterday and today. Overall, the whole trend is bullish, but right now we have a 2-day bearish leg coming down. Okay, so now what I always do, okay, well, not always do, I always do with you, but when I'm trading like myself, I have these already done. I don't erase them at the end of the session. I just keep them static. I kind of clean them up, but then I just come in and I watch the volume. But anyways, for learning purposes, I know that there's new subs that always come on every day and things like that, just to get you guys caught up. There was our all-time high. Okay, that's where we peaked right up there, all-time high. Nice psychological auction number, 3,500. And what was the response? Selling pressure. That was a big exhaustion wick. So wick analysis, what we're going to talk about, is it a long wick or a short wick? Compared to the day before, look how short that wick, look at the long wick. So that tells you something. And then if we're coming back up, in order to fill that, it takes a lot of energy, it takes a lot of momentum, it takes a lot of volume to continue to backfill that, and then create a new high out of it. If it's a short wick like this, those are those easy ones to fill, and then you're popping. Okay, those are those firecrackers we talked about. So from the all-time high, what is the most logical low point that we have? So you can see it push down and that wick right there. So when I got my all-time high, I have like kind of my opposite of the lowest point. I know it's not an all-time low, but it's the lowest point since we retraced off of that all-time high right there. Date-wise, you can see May 15, it came right back up, 3,120. So this is our range, overall higher time frame range. I'm talking like going back from April. This is like a monthly, weekly range. April, May, June, July. We're going into August in the next few weeks. Okay, so you can see that this is our kind of monthly range. And then now we also have zones. Okay, so key zone was, I tell you guys all the time, sometimes it just takes two bodies to identify a zone. That's all it takes. You know, that's why I love scalping, because when I'm scalping 1 minute candles, sometimes in 2 minutes I can figure out a zone real quick. So like if these were 1 minute candles, you have a big 1 minute bullish candle, then the next one was a bullish ignited 1 minute candle that broke, and then it got rejected back down and it closed right there. As soon as I see that blue volume and that black volume in there, I box it in, and then what I do is I stretch it into the future. For the next couple, let's say, for example, these were 1 minute bars. Then I see if the next 3 minutes, 4 minutes, 5 minutes will come inside here and get rejected down. I might scalp short it. If they come back in here and they close above here, I flip that zone green and retest this. I might scalp buy it to fill that wick and maybe pop for a few more pips. So that's how my brain works. That's how my brain operates when I'm scalping. Why should my brain not operate on the daily? So same thing. Those are now just not 1 minute candles, those are daily candles. But once you figure out that volume, stretch it into the future. Then you see how many days it took to get back in there. It took 2, 4, 6, 8, 10 days. So a whole 2 week cycle took for it to come back in. And what was the response when it came in? That massive fake out. I remember on the live call, I called this out, this bullshit move. This is as market maker as you can get. Like as a market maker, it's so obvious. Like it's so obvious. They got to stop doing this. They got to be a little bit more creative than this. Like just use your common sense, guys. Just read this, okay? And ask yourself. That's what I do. I always ask questions. And then when I start scratching my head, I'm like, this makes no sense. So then obviously you know that it's a manipulated move, and pick up on the clue, because you can trade with the market makers. Be smart, guys. Don't go against this. Look at this move. Okay, this was a huge daily bullish candle on May 5th, Monday, starting the week. Okay, it engulfed almost 4 days of bearish volume. Very strong. Look at the size of the wick. It's barely, like there's no wick. It's technically, it closed like 98% near the high. So it's ready to, wants to continue to go up. The buyers are right. They closed at the highest point of the day, very strong. Look at this transition into the next day. It opened. It was just a shallow, tiny pullback, and the buyers were asking to trade back at the opening price because they want to continue to go up. So as soon as it popped that wick, it just filled up everything to the left. Look, 2 days filled up all of that bearish move. See how strong it was? And then look at where it closed on a Tuesday. Again, 98% right at the high. So look at how they opened the next day. Like this is as manipulated as it gets. Okay. Where it opened right there, that's where technically it should have just, filled that little tiny wick and just move. I remember I measured this. That wick was 35 pips. 35 pips. And you got 2 days. Okay, if we add up the 2-day candles, you have almost 2,000 pips in those 2 days. And you're telling me the next day it couldn't open after 2,000 pip 2-day increase and just test 35 pips? That's a joke. That's a complete joke. And then you see what they did. They opened it bearish ignited because they're bringing it down. They made it pretty visual on the open, and then they brought it down. It closed below 50% of that previous day candle. Next day, the buyers were strong. Look at them. They brought it right back in there, and then that's when the sellers rejected them back out and then brought them gold move down to that lowest point down there. So do you guys understand what I'm saying? When you pick up on clues like this, think about it. Think about it. Now you stretch that zone into the future. Again, it came in here, back down. Look at it again. Came in there. Now this is where they kind of faked out the market. Yes, they did open, and then they pushed. They filled that, caught a lot of buyers up there buying. And then what did they do? They faked them out. They brought it back down and pushed it back down. So look again. Now the 4th time we've traded in here again. There was another fake out. Look, it closed above there. And then look what they did. Short wick. They, baited in those buyers early and then pushed them down. That was yesterday's candle volume, bearish engulfing. It engulfed all of Tuesday. Today we've already opened, came up. We already have a high of day. We're below 50% of that yesterday's volume, and now they're pushing it down. So are we going to come all the way down to like 3,350 right there, that point of interest where those two bodies meet? Or are we going to are the sellers going to come back down and start breaking some of these higher lows down here? So that's what we got to watch for. But with this red zone, don't stop. Stretch it into the future. What about in 2 weeks if we're coming back in here? So you got to always be prepared for that, okay? And then now that I found the red zone, can we find a green zone? Yes. So the green zone that I had identified was during this bullish flag week. So I'm not going to sit there and talk about this, but I identified that. And what I did was I stretched it into the future, okay? And now what I'm looking at is, I talked about this fake out yesterday, which created that lowest point, but it came right back in. And then those two tweezer bottom equal lows on the daily. Like, I'm just going to place a yellow line. I know we're nowhere near these, but just for educational purposes here, right there, you see when it came down, it stopped right there. And then the next time it came down, those to me look like equal bottom lows. So you see how they're holding up the depth of market. They're not allowing it to break for a lower low. They're holding it up. And look at also where they're building it. They're building it above that green block. So that you put 2 and 2 together, that should start to make some sense. And then maybe you could look for a buy opportunity. And you had a 3-day buy. When it came up to resistance, they pushed it back down. When it came up, higher lows. Continue to make some higher highs. Then we kind of consolidated in here. But if you still watch the wicks, you're looking at the consolidated volume, but you see the low come down, it's a higher low. You see it now, that big bullish candle on Monday, start the week. Look, it closed above everything with solid volume. Short wick. Again, the next day they pulled it down, filled the wick, and popped. Okay, and now we're coming all the way right back down. So now it gets interesting. So now what we got to do is we got to know where our daily trend line is. Okay, so our daily trend line is right here. If you want to be accurate, okay, you can go to the range low, that wick, that wick, that wick. If you want to go to the bodies, like, you can go to the bodies as well. It's up to you, whatever you want to do. For this call, I'll go down to the wicks since we can get some clean touches on the wicks. And with this line, remember on the daily, I use yellow lines. So I'm going to make this a yellow trend line. So what that will tell me if I go down to the 4 hour, if I go down to the hour, if I go down to 30 minute, 15 minute, 5 minute, or 1 minute, if I see those time frames touching this yellow trend line, I know that they're coming to that that daily ascending trend line. Because every time it came down here, it went back up. Came down to the yellow line, went back up. Came down to the yellow line, went back up. We might be coming down to the yellow line again, and it could possibly come down here and go back up, right? But it could break. Like, there's no guarantee that it's going to come down here and hold. It could break. They break the trend. And then what happens? It could be a wick that comes down here and then again goes back up, gets inside that ascending trend, and then option 2, continue to go bullish. So then they could fake that out. However, option 3 could be they actually close it below there. And then now that yellow trend line can, you know how it's acting as support now, it can act as resistance trend line. So it could come back up there for a retest, then the sellers push it down, and then they got control, and then they're filling this wick and maybe coming down to those bodies or back down to that yellow right there to see if it's going to be 3 bottom lows. If they break it, there's a new lower low in the green box, and I guarantee you the big buyers will be waiting in there. Okay, so that's just some type of analysis. There's multiple options where it could go, but in your head, you got to have a playbook of all options, right? That's how you can get better at trading. Know what option 1 is. Know what option 2 is. Know what option 3 is. Know what option 4 is. And then you just process of elimination. You wait for candle bodies to close. And then I know you're not 100%. If you do all that, you're going to become a millionaire. No, but you're going to clean up your mistakes with proper risk management. Then I can tell you over time, yes, you will make money. You will eventually become a millionaire. I can say that over time. I'm not saying overnight. I'm saying maybe it might take you 5 years, 10 years, 20 years. But if you stick with that approach, you're well on your way. Okay. Do you guys want me to go over those options again? Or are you guys good with those? Because Guys, that's the secret sauce. Are those options? What other options can happen? You tell me. I'll go through every single option if you guys want. But someone said, Ron, I don't want this to be an education class. I want to be live trading. So that's what I mean. If you want education, guys, I'm going to save those type of classes for education, and it will be labeled education. And then it's not live trading. It's education. But today it's live trading, so we got to continue moving. I know about those options. I hope you guys know about them too, okay? And then you can learn more about options trading, okay? So what I see now is, I see on the daily, we came in here strong, and then look at, they rejected it back out. What does that look like? It looks like a V top, okay? So it looks like the start of an M, right? The first two legs. Leg one and leg two. Leg one is the blue leg. Leg two is this black leg coming down. Now, what's going to happen? We got to find where our neckline is. So look at over here where we were consolidating. Bearish, bullish, bearish, bullish. Maybe it will come back inside here. Look, and it's right in the trend line meeting in there. So that's where maybe we could see some sideways consolidation. And then the neckline. Then maybe we come back up for a double top, or maybe we break. Or it kind of comes back and retests this, and the sellers are dropping it back down. Okay, but what we got to understand is, where is it going to find the neckline, either to go back up or to continue to go back down? This is where a majority of daily volume for 1 week was trading sideways. So it might want to come back in there and trade sideways for a little bit. We do have a big red folder today, so that could dictate if gold takes out these lows, maybe if it reverses back up into here, whatever is the case. But what I got to do now is follow the yesterday's volume and today's volume, right? So if I'm following the previous day, I can see, holy shit, did they ever fake out those daily buyers up there where it opened, all those they bought, and boom, they slammed it down right near the low they closed. Did it engulf that candle? Yes. So we have this is a bearish engulfing candle. Now I'm turning it into an education class. If you don't know what a bearish engulfing candle is, this is the easiest, most visual education lesson of your life. This is a bearish engulfing candle. It opened and closed below this bullish candle. It engulfed all of those buyers. If you want an easier way of saying this, have you ever played that video game Pac-Man, where Pac-Man goes and eats all the pellets? This is Pac-Man eating that blue pellet right there. He ate it, okay? So that's as silly as an analogy as we can do, okay? Play Pac-Man, and that's Pac-Man eating that pellet. Now, Pac-Man is still hungry. He's still eating the next pellet. Is he going to eat the entire pellet? Is he going to engulf that entire bar? And then we got full control of the sellers now on gold. Or are buyers going to come in to save this trend and start pushing up all this bearish volume back up and maybe flip this? But look, this is all happening in the big red zone. Okay, this is not just a Mickey Mouse zone. This is a big all-time high supply zone where it came in there from the all-time high. It came in a second time, rejected back out. It came in a third time, they rejected it back out. It came in a fourth time, they rejected it back out. So that's telling you that's very strong supply up there. That's a lot of sellers up there. The buyers are there, they're trying, but there's a lot of selling pressure up there. There's a lot of offers, okay? So we might see a possible leg coming down, like even breaking this trend line. That's what I'm curious to see, what will happen this week. Will this stay intact, or will this get violated? So now what I can do is let's find 50% of previous day's candle. How can we do that? Two options. I'll give you guys options. I do it sometimes like this, just by guessing where 50% is. Do you guys see how I guessed? Open, close. I don't use the wicks. Okay, I got this question yesterday. I'll answer that question right now. I don't go from the highest to the lowest point. When I'm doing this is volume analysis. Only the volume, only the bar of volume from the open to the close. Here's the open to the close, whether it's bullish or bearish, okay? Just making that clear what I do. I'm telling you my way of doing it, okay? And someone else does it by doing the wicks. That's fantastic. That they can teach you their way how to do it. I'm teaching you my way. My way is I look at 50%. Okay, right in the middle. Sometimes I'm very, very high. I smoke a lot of weed. I can still identify where 50% is. If you don't want to do it like that, If you want to do it more the professional way, now you're a professional. You know, when someone asked me the other day, Ron, are you a professional? No, I'm not a professional. I trade in my shorts and my t-shirt in my basement. I'm not a professional. But this is the professional way. If I came and I wore a suit and tie here tomorrow and I did this, you would be like, oh shit, this guy works on Wall Street right here. Look at this. Okay. Look at, I even made my Fibonacci tool more fancy for you guys. You see how I got rid of what did I get rid of? Who knows? Who knows their Fibonacci retracements, their ratios? I got rid of the 236. I got rid of the 786. No need for it. No need for it for the Fibonacci style. Okay. All you need is your beginning point, your ending point. Make sure you know your 618 is the golden line. And then you want to know where your 382 and your one above, one below, which is 382, and my 618. Okay, so you see right here. Look at what is that? That's the POC. What's POC stand for? POC. Who knows what it is? Come on. The faster you guys answer these, the faster I go. The slower you guys take to answer these, the slower the session's going to be. What does POC stand for? Come on. I want to know if you guys know these things. To me, it's very basic. If you don't know what a POC is, you got a lot of learning to do. Yeah, Jake, it's a point of control. What does that mean? What does that mean? I know we know what POC stands for, but let's take it a little further. What does that mean? Point of control. Point of control of what? Of what? It's the point of control of this body of volume. Who is controlling this volume? At the close of this candle, is it the buyers or sellers? There's only two parties involved. Who is controlling that volume? Who would you say? I know it's a stupid question, but I want everyone to be on the same page here. Who's controlling this? Should this be a neutral point of control? Nobody controls it. Should it be a green point of control where the buyers are controlling this? Or should it be a red point of control where the sellers are controlling it? You guys tell me. Sellers, yeah. But it boggles my mind that there's some traders that don't know this, okay? And I'm not doing it to offend anyone. I'm just trying to get on everyone's level. There might be someone who started trading yesterday first time, and I understand. It took me years to learn what a point of control was myself. But now that I know what it is, let's all learn what it is, okay? So right there, what is that representing? That's representing the premium area to sell, right? So let's just go through this. If the buyers come back up, if this is a big blue candle, blue, it comes into that bearish point of control. And it's got a high probability that that's where a lot of sellers are, okay? And then when it comes in there, it might come in here, get filled, transact, and get rejected back out of there because there might be more offers than there is buyers, right? You see right here how maybe if I was a seller and I didn't get in on this day and I'm not in on today, do I want to just start hitting the sell button right now? If I do that, then what happens if it reverses back up? I'm in drawdown, I might get stopped out. There's a lot of smarter traders, smarter than me out there and smarter than all of us, that they're not selling down here. They are very patient and they're waiting with pending orders, with sell orders right here. Okay, do you guys understand what I'm saying? They don't want to sell down here. This is where they call us dumb money. You're basically dumb money if you're trading down there. So, you know, if we sell right there, the lowest point of any candle, that's where it's said that that's dumb money. Okay, I don't make these up. I'm just telling you what they say. Okay, I say that they're the dumb money. Okay, we're the smart money. So we don't need to sell down here. You set an alert in here and patiently wait. Whether it comes to you in 1 day, 2 days, 5 days, 10 days, or 20 days, it doesn't matter. Because I know if it comes in there in 20 days, on that 20th day, I could be making money. I know if it comes in there in the next 5 days, if it comes in there, I might be making money, right? So I don't care how long it takes, okay? But you got to know your time frames, what you trade on. I know if this was 1 minute, if that was a 1 minute bar and that was another 1 minute bar, it comes in here and maybe in the next 2 minutes, 5 minutes, or 10 minutes, I could be looking to sell, right? So it's all relative. All these candlesticks have the same characteristics. You just pick your time frame. Okay. So yeah, so what I do now, when that's identified, now I stretch it into the future. So it's telling me I've got a point of control of supply in an all-time high supply zone. So that kind of strengthens even this selling zone. Not only is that point of control created, it's created in an all-time high supply zone, this bigger red zone in the background. Okay, so we got to identify it, stretch it into the future. I don't know if we're going to revisit this area tomorrow, today, next week, next month. I don't know. But we got to identify it, stretch it into the future. Place an alert at that yellow line if you like. Right click it, alert, create, yes. So anytime it comes back in there, I'm going to get alerted. Okay, that's how you patiently wait. Now, let's continue looking. Maybe we'll find a new point of control, one that we can maybe trade today. Okay, I don't think gold will come all the way back up to here unless something substantial happens in the market and switches, could be news, things like that. But now let's just follow. How did we open and close yesterday? So there's our point of interest. POI, point of interest. That's something different. This was POC. Now this man is talking about POI. That's point of interest. It's just an interesting point to look for a buy or a sell trade. Okay, that's what it is. Point of interest. It's an interesting point to look for a trade. That's as simple as it gets. Don't complicate this, guys. That's why it's called a POI. It's just an interesting point to look for a trade. Do you guys understand what I'm saying? On a daily position, that's where the volume closed. In this cycle of that entire day, the volume closed right there. It closed there for a reason. I don't know why, but it closed there for a reason. The next day, it opened right here, same spot. It opened there for a reason. I don't see any gap ups. I don't see any gap downs. So it's a clean transition from the close to the open, and it's a point of interest. Okay. If we revisit this, look how far away we are from the opening point of interest. If it comes all the way back up, then I'm going to have an alert there because I want to watch that to see, will the body flip and reverse the entire day and start this uptrend on the daily, or is the sellers going to be there and then they continue to protect this point of interest and push it back down? So if it comes up there, I want to put an alert up there just to inform me, okay? And then now let's follow this volume. So we opened and it was initially bullish. It made a high of the day. So I identify all high and low of the days with a purple line. There's only going to be two purple lines on my entire chart, always. It's just the high and low of the day, okay? So there's my purple high. I look, it's below that point, bearish point of control, the bearish engulfing candle. So when it came up there, it was a shallow pullback to the upside. Sellers got in and started selling right away. They engulfed those early buyers. And then look at, they also flipped and filled yesterday's low. So not only did they reject the buyers, they had enough volume to create a downtrend. It takes two candles to create a downtrend. One lower high, one lower low, a new lower high and a new lower low. You've started a downtrend. This is a 2-bar downtrend. Okay. The buyers were not there, creating an equal bottom low or higher low to keep this uptrend intact. So right there, it broke. If you want to have a point of interest there too, you can. Okay. But you see how close they are to that yellow line? But it is an interesting point. We broke it. And now we're continuing to come down. Look how strong the sellers are. And now we're trading into this big body over here that started the entire week, Monday. So is this a midweek reversal going to the downside and maybe it will kind of pick up on a Friday? Who knows? Okay, so we're coming down. Do we have a wick? Yeah, so we've already established a low of the day so far. So there's my purple line. Will it still be intact in the next 5, 10 minutes or hour? I don't know. If that bearish volume comes, it could easily break that, create a new low of the day. But right now, it's intact. 3,361 is the low of the day. There is some buyers right now. You can see by the wick, they're pushing it, they're rejecting it back up. But we've got this massive bearish volume above us, okay? Let's just continue to walk down. Hypothetical. If we come back down to our low of the day and we break, where do you think we could go? Maybe right here. There's a big point of interest, okay? Interesting point on the chart right there. A body closed right there on Friday, and that's where we opened our week. Okay, so now when we're talking on a weekly point of interest, that's Monday's open. Look at the price tag, 3,350. It doesn't get any more psychological than that. It doesn't get any more auction theory than that. It doesn't get any more easy than understanding that. Okay, 3,350 easy transactions. Why don't we start the week right there on a Monday? So now we're going to see this week, are they going to come down and retest this or even possibly break it for a new low? Okay, that will be very interesting point to analyze the market. Put an alert in there. Interesting area. I want to be, if it comes down there, I'm interested. That means I'm interested in looking at a trade. I'm interested at looking at maybe buying, or I might be interested in continuing to sell down there. Okay. Another interesting point is you got a 100 pip move, like from 360 to 350. It's $10 move on gold. That's 100 pips. I might be looking for 50 pip scalp, 30, 40. There's got to be some interesting zones in between this purple line and this yellow line. This is called now reading the tape. You're starting to look at other days when it traded in here, bodies closed, open, wicks, things like that. Try to look for where you can get some touches, but when it's mixed like this and you're kind of, I don't know what to put it right there. I don't know what to put it right there. I don't know what to put it over here. Ron says sometimes do this, do that. You know what the easiest way is? Keep trading simple. Grab your Rananachi tool from the purple line to the yellow line. Look how simple that is. There's 0.5, 50% of those two lines there. You want to keep this real psychological right there. There's the yellow line. If you want to draw yourself a little zone where there could be a pocket of buyers still coming in the market and holding that uptrend, it's right there. Okay. That wasn't very complicated. I could get my daughter down here to come in here and do my charts for me, and then I can sleep in, and then I'll show up at 8 o'clock here. Okay, right there. There might be buyers that early on in the week that started this big bullish move. They might be now positioning orders to protect their position. They might be in drawdown right now. They're losing their profit right now, coming back down to maybe their break even wherever they entered. Maybe they're going to add position 2 in here to lift it back up, to sustain this trend coming down and to sustain this uptrend to protect the depth of market. Could be right there. Okay, it could definitely come in there, break right down to there, and then we're trading right in there. Look at the previous retest was 50% of that bullish candle. Okay, so right there, that's another interesting point. That was last Friday. We've already retested it this week, 50%. If it holds down there, that's where you could see that bounce. So I'm trying to figure out where the neckline is. All of this is to figure out where the neckline is, where I see my buyers, maybe consolidate and then push it back up for that next leg up, or sellers are going to break through all of this stuff down here. Okay, so one other thing before we move off of the daily is, can we figure out maybe where 50% of the current volume is right now? I know this is a live candle and it's moving. I'm going to try my best to put it right where we opened and where the current volume is right now. Now I can see exactly right there is 50% of the current volume. And look at the price tag, guys. I don't make this up. 3,374 and 57 cents. There's your psychological point. 3,375. Online auction theory. Okay. Very, very, very easy stuff. Okay. Right there. So if the buyers come all the way back up, they push it. Right there could be the point of control of the current volume, and then they push it right back down. If they can flip this, then the candle could start to maybe trade back into this all-time high supply, but still a lot of sellers are there, and we're in still a lower high. So maybe it comes up, maybe they'll push it back down. So think about that as when you're trading a 1 minute or 5 minute candle. Sometimes you're in a 5 minute sell and it's coming back up and you're panicking, you're getting scared, but always in the back of your mind, think of those point of controls to absorb those buyers and continue to push down. As you saw my trade during Wall Street yesterday, where I was in a sell, it came back up, I was still holding it because I had the point of control from the previous candles, and it slowly, surely made its lower highs and lower lows. The sellers did their job by absorbing the buyers and continue to push it down. So that's how you can learn how to trade, guys. Okay, so we're at the lowest point, probably going to break this purple line. Let's go to the hourly now real quick. Hourly. Okay, look at the hourly. Like look how clean it's trading actually. Got this big bullish move up, pull back, held, higher low, look, or higher high, breakthrough, consolidated. There's an M top, okay, came down, back up. I see a liquidity grab wick. Right there was the closing bar below all that structure, and it started right here, Wednesday and 9 a.m. yesterday. So started, there's the push all the way back down. So you see how it backfilled everything, and then came in the consolidated zone. That's where it was trading sideways. You see it went down, up, down, up, down, up. And then see when it came right back in here, right in that little zone, again, down, up, down, up. And that is a head and shoulder pattern. This is your left shoulder. This massive spike out of here is your head. I know it looks a little funky like this, but all patterns look funky. And this is your right shoulder, and that's your continuation to the downside. Now you see where we have hourly consolidation. See, right there, guys. Do you guys see what I'm looking at? Okay, right there. Do you see in the past where we had this hourly consolidation that created that bull flag where we came up, we came down, we had some spin top candles, and then it broke out of there? There was a lot of volume, 1 hour, 2 hour, 3 hour, 4 hour, 5 hours, 6, 7 hours of sideways trading to continue to the upside. Now, look at me stretching it into the future. And guess what? We are on the hourly and we're trading right back in that zone again. Okay. So you see how we're down and now we're trading in here. Are we going to continue to trade choppy in this area? We can scalp the shit out of this zone if you guys want. But what I would be waiting for more, if I was an hourly trader, I would be waiting to see if the buyers can maybe close it back above here, retest this, and then you're starting to slowly come back into here. But remember, this is daily resistance. It could come in there, get a lower high, and push right back down. Okay, and then you're using this as support, this yellow line. See if it will create support that daily. Maybe it might have to create support back in this block, but right there, higher low, then you could fill back up and then maybe have enough momentum to continue to break out. Then you trade back in where this block of volume is, and that's where I guarantee you the big sellers are. They're probably in there. Why? Because look at where all the transactions are occurring. Right there, see? Right there, up. Came back in, traded in here, down. If it comes back up in here, extend that zone right in there. Then we'll, if I'm following the low trend here, like even if you draw your, let's say this is the lowest point, that's the highest point. If you were to grab your Fibonacci, I know I took a couple other ratios off of it, but you see what I just did from the highest point to the lowest point right there? You see, there's the 618 right in there. Look at almost right where I placed that the pathway. Look, there's your 618. Do you guys understand what I mean? Like it could come down there if this is the bottom, it retraces back up there, and then it's sell time. Why? It's not just the 618, but it's also this specific zone on the hourly, guys. You know, do you guys, anyone understand what I'm doing here, or am I just wasting time here? Okay, but whenever you identify a zone, stretch it into the future. Okay, so right now we're consolidating in here. Okay, on the hourly, what's going on? I see lower lows, lower highs, lower lows, lower highs, lower low, lower high. That lowest point of the day is a lower low, but maybe we might bounce up. Do we have now an hourly point of interest? Okay, now Ron's going to boggle your brains here. We talked about daily, enough about daily, POCs, POIs. Now we're on the hourly. Can we find an hourly point of control? Yes, I just showed you guys. There's an hourly point of control. If we come back in there, that could be an hourly point of control. Now, I'm going to take it further. An hourly point of interest. Some of you guys already have the line there, and if you do, I want to come and give you a big hug and a kiss. If you do this, guys, place a white line. Where would I place my white line? If anyone can place it exactly where I'm placing it, I'm coming over to your house, I'm giving you a hug and a kiss. I don't care if you're a male or a female. It doesn't matter to me. I'm so proud of you guys that you guys can get this, that I will do this. Where? Tell me a number. Come on this chart, where would I place a nice white solid line? I'm looking right at it. No one wants a kiss from Ron. Okay, I get you. No, I understand. I know you guys know, but no one wants to do it because no one wants a kiss from me. I'm looking right here. Right there. Did anyone look right there? I'm not going to come and kiss you guys, okay? Don't worry about it. But what do you got? You got 3362, Jay? Look at where I'm looking at, okay? I'm looking at this big bearish bar at 5 a.m., okay? I'm kind of just guessing 50%. I see when it came, just broke a little bit below it. Remember what I always say? A little bit above, a little bit below. That's your zone. See how it came down, back up, broke that white line, back up. Now you got the big bearish bar that physically, technically closed below it. And then now look at when it retested it, the white line, little bit above, little bit below, is now resistance, pushed down. Again, it came up and pushed down. So right there, that's an hourly point of interest. I don't want to guess, okay? I want to pinpoint it. So what can we do? Grab the Rananachi tool from the opening of that 5 a.m. candle to the close. Look at how close I was to almost guessing where 50% was. But let's not stop there. I'm going to blow your brains now. Point of control, hourly, neutral. Is this bearish or bullish? What should I make this hourly box? White, red, or green? Obviously red. Why? Because that hourly bar closed below, just like I did on the daily. Same shit, different day. That's all it is. So we make that zone now red. We found an hourly point of interest and we found an hourly point of control. Whatever you guys call it. Some of you guys call it fair value gap. Some of you guys call it this, that. I don't give a shit what you guys call it, okay? Call it what you want. I call it Mickey Mouse Zone. I don't care what the name is. Just know that that's an interesting point of control. If it comes back up today, it could go right back down. That's where maybe we could sell. However, I'm going to state the however. Listen closely. We may break through this and close above it. Okay, close blue above it. If that closes above it, we just change it to green. This might become an hourly green point of control for the time being. It might come back in there, get a wick, go back up, maybe create that to there, and then come back, and then we're off, okay, to the upside. But that's an interesting point and a point of control where if it comes up, it could go back down. Maybe look how it's already been tested. It came in there. What was the result? Back out. It came in there again, lower high, and they pushed it back down. Now they created that new lower low. Look at what they did. They just took out the current lowest point of the day and dropped it, right? We're getting close to COMEX. We're getting into that bigger green zone in there. Hourly RSI is deeply oversold. Like it's been sitting here since London, 3 a.m., 4 a.m., 5 a.m., 6 a.m., 7 a.m. We're down about 23 on the RSI. That's signaling that it's oversold. Everyone and their mom should be buying gold right now. That's what that signal is telling us. But if you did that, you'd be in drawdown. If you did it on that candle, you didn't do anything, they pushed it back down. If you did it on that candle, they pushed you back down. If you did it on that candle, they pushed you back down. If you just did it on that candle, you would have been in drawdown, but now maybe it's buying back up. So now this hourly candle just opened up. It's got 56 minutes to go. Who wants to sit here and watch this candle for the next 56 minutes? If you guys want, I'll stay with this candle. We'll watch this hourly candle. We won't even go to a 5-minute candle. If you guys want to do sessions like that, you guys tell me in the comments. If that's something you guys want, let me know. I don't always have to go to scalping on these calls, but scalping is fun. It's interesting because what we do now from the hourly, I don't want to wait 56 minutes for this bar to close to maybe look for another trade. What I do is you can bring it down to the 30-minute. The 30 minutes going to close in 26 minutes. If you want to wait 26 minutes, wait for this 30-minute candle to close. There's a 15-minute candle. This 15-minute bar is going to close in 11 minutes. If you want to wait out 11 minutes, wait it out. There's a 5-minute. See this bar, this hanging man 5-minute candle that just broke that lowest point of the day. That's got a wick right here, right above the green box. It's closing in 57 seconds, okay? If I want to go to the 1 minutes, the 1 minutes have already done their thing. This 1 minute candle is closing in 48 seconds. I can see a pattern it's building. It just had at 8:02 a bullish engulfing candle. Okay, let me just show you guys real quick here. This is where I can speed up the education now. So do we have a point of interest on these equal bottom lows? Let's start from the bottom. Do we got equal? Look at those tails. Look at those wicks. Okay, I'm going to zoom in. Well, Ron smoked a big joint this morning. Okay, is it equal lows? lower low or higher low? What do you guys tell me? Okay, right there is the 1 minute point of control. I'll use this red line just to help you out here. Okay, so technically it came down, it made a lower low. If they want to extend this, they can. Okay, it wasn't an equal bottom low or it wasn't a higher low. Okay, and then look, now you tell me, let's just go through this. Was this a bullish engulfing candle? Did Pac-Man eat this bearish 1 minute bar? Yes, it did. It engulfed it, right? So on this bullish 1 minute candle, can we figure out a point of control? Grab your Rananachi tool from the open to the close of that candle right there. There it is. There's 50%, okay, of that volume right there on that 1 minute. I'm also going to draw a zone, okay, just like I did on the daily, just like I did on the hourly, just like I can do on any time frame, same shit, different day, stretch it into the future, right? Now, what is that? That is a 1 minute point of control, okay? Well, let's just live watch what's happening, okay? Did it come down? Yes, it did. Did it test this box? No. There's 2 bars of volume right now, right there to there. This is where you can start to find a flag or consolidation. Remember I told you it just takes 2 bars. There was the volume where it came up. It impulsively broke and look at where it closed, right inside there. If you stretch it into the 3rd bar, look how it picked up the ignited bullish open. That's a 3-bar play, okay? Guys, I'm dropping some nuggets right now. If anyone is paying attention, I swear you guys can learn so much. And I know that some traders charge a shit ton of money what I'm spitting out right now. They'll charge you a lot of money to teach you what a 3-bar play is. Right there. You see how that bullish ignited, make this, put this, take a snapshot of this. Put this in your playbook right now. Take your cell phone out and take a picture of this pattern. Okay? This is a money maker pattern. I'm telling you. I have friends and myself that are retired just from this pattern right here. Okay? This is called the 3-bar setup. Okay? Right here you've got, it starts with a bullish engulfing bar. Okay? That's step 1. Then you got your inside consolidated bar. Okay? Follow me what I'm saying. You got your inside consolidated bar. And then look at how it opened. This is a textbook 3-bar play. It doesn't get any more textbook than this. I will tell you, if there was a wick, I'm very technical. I'll tell you the exact. This is as technical as it gets. It opened, ignited above the point of control. Okay? Guys, please follow me. It took me a lot of years to figure this shit out. Right here. You got that point of control, but I walked you guys through from the daily to the hourly, and you see how it's holding. Look at how they open the bar. That's why I always tell you guys, pay attention to the open of the bars. Is it a bullish ignited bar? Is it got a wick? What does it have? It opened ignited, and look at how it filled right through here. That's like, some traders call it a bull flag. This is a 3-bar price action play. So it broke, it created the high, and closed right near the highest point. Okay, that right there. That is where sometimes a scalper will take a buy off of that right there and just look for that 3 bars and get out of the trade. Okay. And then look at where we closed. Okay. Points of interest now on these 1 minutes. Remember, I'm on the 1 minutes. Point of interest. Bar close, bar open. Did it open and it was bearish? Yes. Did it come into this green box? Not yet. This is the bigger one that started it all with this big bullish ignited candle. This is just the flag pattern. Okay, so it did continue to move. So we created a higher high. Have we created a higher high from the overall backwards trend over here? No, that was the previous high at 756 before we started at 8 a.m. We just retraced all the way back up. But you see how high it came? It didn't, in fact, tag or create an equal high, a higher high. That technically is a lower high. Okay, and then you see what I do there? From that high to that body, to that body, to that body, that's where I draw a zone. Guys, you guys are getting a full course here on price action. And some of you guys appreciate it, some of you guys don't. I don't really care, but I want to teach you guys how to trade. Okay, some of you guys want to learn how to trade, and I respect you guys because I also was very hungry to learn how to trade. I never ask anybody to teach me how to do this, so I feel like I have to teach you guys, okay? But please pay attention. Right there, that was the highest point. You got, look, and then just go backwards. Look at this shit. If you go backwards, you see that was the high, that was the high, that was the high. Put the pieces of the puzzle together. It traded in there, back down. Look at where they just pinned it. That was a bullish 1 minute candle right there that just came in there. How did it come to the highest point, the lowest point, or the middle? Get your tool, guys. Like I'm telling you how psychological this shit is. Once you figure out a zone, there's your zone, okay? even if I was to go, look, guys, I like, this is why I'm telling you guys, I don't make this stuff up. Look, right there, there's the 0.5. It is exactly, technically that wick right in there, okay? That's how precise. That's why we're called snipers. We got kill shots over here. Okay, a kill shot is when you're waiting for a pending order right there, and you get filled and you shoot that candle, and that's the results of a kill shot. You shot the head of that candle and you killed it, and that's what causes a shooting star. That's like as precise as you can nail. Also, when you nail an ignited bullish bar, that's a kill shot. You got right in with zero, absolutely zero drawdown. Okay, now look at how it's building on the 1 minutes. Okay, so we're coming up to a previous neckline where the 1 minutes tried to get up here, they got pushed back down, higher low, come back in, they created that higher high all the way back down. So it looks like, but what happened was, look at the big bullish engulfing response coming out of there, created that 3-bar play right into there. Again, just pulled back into that point of interest. They tried one more time right in there. They created a higher high just above there, but not above this entire zone. And then look at now the volatility. So that 1 minute candle just came all the way down and coming right back up. So we are consolidating now right below here. Guys, we are what, 9 minutes away from COMEX. Do you guys want me to stay with these 1 minutes going into COMEX, or do you guys want me to transition to the 5 minutes? It's up to you guys. You guys let me know here. Because we can walk minute by minute into COMEX if you guys want. 5 minutes, Patrick? No worries. Okay, we'll do 1 minute another time. Okay, going to the fives. Let's go to the fives. Okay, so I broke down what was going on in the 1 minutes. What's happening on the fives? Same thing. We got price action. See, all of everything I did, remember on the 1 minutes? You see how it looks on the 5 minutes? That was the 5 minute bar, came all the way down there, came all the way back up. It closed as a dragonfly doji right here, right at the highest point virtually, and then coming back up. So we're getting this 5 minute resistance. We came in here at 755, they pushed it back down. We came in here at 805, they pushed it back down. We came into it right now and they pushed it back down. So we've got consolidated volume. Okay, so I'm just going to remove the 1 minute stuff, just so we can focus on the fives here. But do you guys see how you can kind of analyze whatever time frame you want? A lot of times when I'm on the 1 minutes, I'm walking into trades all day, every day. You know what I mean? Like someone asked me, Ron, how many times do you trade? I go, I don't count how many times I trade. If I want a grind session, if I want to scalp, I'll go hours. It depends if I have a daily goal of how much money I want to make or hit my percentage goal. But my thing is hit my daily goal and get out of these markets. That's what I want to do every single day of my life. Just, I have a modest 1%, 0.5%, hit my daily goal and just get out and go do my other things I got to do. Otherwise, I don't want to just sit and stare at the screens all day. You know, that's why I stressed to you guys. When you hit your daily goal, get out of these markets, okay? So this was the lowest point of the day. Remember that purple line that we did? They did a liquidity grab, okay? So let's just put pieces of the puzzle together. What have we seen? We see a liquidity grab where they broke it. Did any bearish volume close below there? No. Can we go look in the past below this purple line where there was some price action? Right here. Okay, see the purple line? Okay, see this big uptrend that we had Monday, the start of the week? Remember that? Look at that big gold move. Okay, there was a previous move where it came up there and then they pushed it back down. So maybe I'm going to target like a point of interest right there at those wicks. I can go backwards to see how price reacted. Again, it was a fake out right there and pushed right back down. So that could be an interesting point if it gets down there to stay above this green block. That's where they could possibly make a higher low. Okay, so where is that? That's right there where already that candle came down. So if you looked back in the past, you could have bought that wick. You could have sniped that right there. Did you see now how you got to go backwards to look forwards, right? You got to look backwards to put a static line. So if I was going a little bit faster, I would have came back here, looked at that. There's a wick, a wick, a wick, place a line right there. And then look at what day and time was this? This was Sunday. Today's Thursday. Now the price retraced all the way back to that point. If you had an alert down there, you would have got alerted. If you had a pending buy order down there, you would have got filled and you would have went straight into profit with no drawdown. Those are what we call kill shots in trading, okay? Now, you see how the bars are consolidating. Like where? Right below here to maybe, I could even go right there, but since I'm so close to that purple line, I'm going to open it up to that purple line, okay? And then I make this neutral. Now I can see buyers are buying and sellers are selling, okay? There's sellers, buyers, sellers. That candle early was a big bullish candle that got rejected back down. There was a huge bearish candle at 8 a.m. when 8 a.m. an hourly open time and sales were in an auction. What did they do when they were down there? They came all the way down there. They created technically that lower low. And when it came in there, the response by the buyers, they rejected that move and they closed it back in the consolidated zone. Next bar was really bullish, but it didn't even break out for a new higher high. Sellers are still strong. They pushed it back down. Again, we came back up, but we didn't break above this red box. Sellers now, that's a bearish engulfing candle that just engulfed those previous buyers. There's a time and place where bearish and bullish candles are more stronger if they're created at like a bigger demand zone. Right now, when you see bullish and bearish engulfing candles inside a consolidated zone, they don't mean shit, okay? They're just filter them out because they're going to throw you off. Like this is where you'll see multiple of them. Look at in this consolidated period. I see a bearish engulfing candle right there. Did the market break down? No, it was just trading sideways. So I don't pay too much attention to bearish and bullish candles inside a consolidated zone. I pay more attention like right here, where that bullish candle came into this bigger red defined point of control, and then a bearish engulfing candle came out of there. That shows more context, okay? You guys understand what I'm saying? You'll always look for bearish and bullish candles. Same with hammer candles, shooting stars. They're more powerful when they're built at a higher time frame point of control, if you guys know what I mean. They're built in more of these red and green boxes as opposed to just anywhere on your chart, okay? I know I talk fast, guys. I know for some of you guys, English is not your first language. I understand. But this is language of candlesticks, okay? This is a candlestick language. We're learning price action language. We're not learning English. We're not learning French. We're not learning Albanian. We're learning price action. This language is universal, okay? There's someone in our group who is deaf. They're deaf, and they're learning price action through what's going on here, looking at pattern recognition and things like that. And they're doing really good as a trader, you know. And I sometimes I'm asking myself, how are they doing this when they're deaf and they can't even understand what I'm saying? But they're reading the price action. They're doing it and they're very successful at it. And it's unbelievable to see that happen. And to be part of that is something special, you know. So I take pride in that stuff. Okay, so you still see how we're just kind of floating around in here. Notice the time we're about 2 minutes away from COMEX. So what could happen? Now, what I do is, do I see like some bottoms? Okay, so I do see a bottom, you know, right here. I'm going to make this like green to illustrate a bottom. So I see we came in it, back up, came in it, back up, came in it, back up. Okay, came in it right there, back up. But notice when we're going back up, it's lower highs, lower highs. So it's still sellers pushing down. There, they really liquidated everything down there. But again, you see this block we have above us right here? We still can't break that. So it's still lower highs are coming down. You know, we're still pushing down. Even if we were just to grab going into COMEX, like this parallel channel right there, you still see how we're still pushing down. So what's going to happen down here? Are they going to drop it, maybe pop it back up? But this is what we got to watch for, okay? This could be creating like a second bottom. This is what we have, bullish divergence. So for some of you guys that don't understand what bullish divergence is, you see how the price from that low and that low, they came all the way down. So even if you were to draw like a little trend line just to show you from this wick to that wick, that's lower, right? So lower, the price went down lower. But if we do the same trend line on the RSI indicator, see from that point to that point, you see the strength is increasing. So the strength is increasing while the price went down. So this is signaling bullish divergence, okay? Bullish divergence is not always guaranteed, but it's good to keep in the back of your mind if you are looking to buy that you do have some bullish divergence, and it's on the 5 minutes. It's not on, I'm on the 5 minute. That's what I was looking at. It's not on the hour. It's not on the 4 hour. It's not on the daily. It's more of this 5 minute time frame. So it's more shorter time frame. It could have a bullish reaction short term. Will it be long term? I don't know, because we've got resistance right here. We've got resistance right here. We got resistance right here. Okay. So we're going to watch gold now. Here we go. Here's COMEX market open. Nice bullish candle coming up. We're still inside this consolidated zone. So let's see, can the buyers maybe break through this channel, close it above here? Will the sellers break through this green box and close it back below there? Let's watch for some higher lows. Let's just watch. You can trade right away. You can wait 5 minutes. You can wait till 8:30. Also, when we get to 8:30, just a quick little recap. We do have our U.S. unemployment week over week claims, okay? So guys, on YouTube, we have 215 viewers. If you got value out of that last hour and 20 minutes of what we just did, that education, please hit the like buttons, because then it inspires me to do more of this. If you don't like, then I know that you guys don't care about education. Then I'll go back to just straight live trading. That's what I want, your honest opinion. That's what those likes are for. They're to help me understand what you guys want on these calls. Also, it's to help grow YouTube, to find traders around the world that want a free financial education to learn how to be financially free and independent for themselves. We trade. I'm financially independent. I don't need any revenue from YouTube. They pay. I make fun of YouTube all the time, how much they pay streamers. It's actually a joke. We've been here for 6 years. We have over 5 million views and 82,000 subscribers. And the lifetime that they paid us is, I think, $4,000. But then it's still, we use it for ads. If we were to take that money out, they keep 50% of it. So then you're only down to 2,000. And then I got to pay 35% tax on it as earned income. So I guess we're left with what? $1,500. And then if me and Dave were to split it, $750 for streaming for 6 years, I made $750. Come on, that's my grocery bill for the month. like YouTube is a joke, but it helps us find people around the world, you know, but I don't rely on YouTube for anything. It's just to help everyone around the world for free to learn, you know. And that's what we're about. We want to give free education, but we also have a private side, you know, where we spend more time with our traders who want to take trading a little bit more serious. And we're there for them as well. We've got a lifetime membership where we do Sunday sessions. Sorry, guys, I've been slacking on those Sunday sessions, but it is the summer months, you know, July and August. It's my kids are off school. We go for weekend trips and things like that. But things, I'll be back. We'll be doing them on a regular basis back with the SST Lifetimers. We'll pick a time that's suitable for all of us. Saturday mornings, Sunday mornings, maybe a Friday evening. Who knows? Maybe we'll figure out a time together as a team. And but summer months, guys, I'm in Canada. You know, like I don't get too much beach weather. It's like July and August are the warmest times, and so I like to take advantage of that. Sundays I go to car shows too. So we do those things. You see, while I'm talking, gold hasn't done anything. It's still in this consolidated zone. We can drink coffee. We can talk. We can have a conversation with each other. We can ask, how is everyone doing? You know, this is trading. Okay, you can just watch what's going on. You don't have to physically just be in a trade and panicking and things like that. Right now, it's choppy. This is not good trading volume. Okay, on the 5 minutes, I'm saying this is not good. Okay, we can wait a little longer, but while we're waiting, you still got to analyze what's going on. So they came right in here, right in the green box. Again, it got a wick. So we've got a lot of buyers in the green box. We know that there was this big manipulated candle to start 8 a.m. that maybe cleared all the stop losses out of there. So they grabbed the liquidity. So maybe it has a high probability of technically going to the upside. We've got like we're at the lowest point of the day. Let's add our daily bar indicator. Okay, so this is our daily bar indicator. Wow, Okay, you see how heavy it is bearish. Okay, so we opened right there. Remember, we originally made the highest point of the day, then it came all the way down, lower lows, lower highs, lower low, lower high, lower low, lower highs. That technically, that wick was a new lower low, but we're holding this green box. So that was the lowest point of the day there. That was the wick. And then we're coming up right now. So even if we do get a short bullish move, again, guys, I'm telling you, it could be short. Like it could just come right up to this red box. And again, they slam it down. That's hourly resistance. We still have this red big candle. If we look for buys, we're counter trading. Maybe we got to continue selling with gold today. If volume closes below this green box, we might flip it red and then it might have enough momentum to fill that wick and keep dropping. But right now, look at where the bullish ignited candle formed. Remember, I told you, if they form at green boxes, they're more powerful. Okay, so it did. It came in there. It closed right there. Look at bullish ignited candle. We're still barcoding bearish, bullish, bearish, bullish, bearish, bullish, bullish. So maybe this will, in fact, impulsively break out. That's fantastic if it does. You don't have to take the impulse trade, but what you got to continue to do is follow it to see, is it making a higher high from that wick, from that wick, from that wick? Right now it's failed. It failed. It was a beautiful open. That's very bullish. And it came all the way up and then it hit that trend line, hit that red box, and it's a lower high and they're pushing it down. Now it's an inverted hammer. It still has the volume when it opened up. And then you see how it's like a rocket. It came down there, it refueled, and now it's coming back up. So this could blast now right through here just with that little that injection. Okay, so this is where sometimes time and place, you look to take an impulse trade. So sometimes I go on the 1 minutes. And then if I go on a 1 minute buy, I'm just looking to fill right up there, grab my 10, 20 pips, and I dip out of the market. Because sometimes when it comes up there, it could come right back down. Okay. If you want to follow this 1 minute candle to see where it will in fact close, you can follow the 1 minutes. But we're going to stick with the fives for today's call. So this 5 minute candle is closing in 3 minutes and 30 seconds, which is a lot of time. It's a lot of time. Okay, so it did in fact impulsively break through that red box. Okay, and it did create a higher high relative to all of this price action. It's lower than over here, I understand. But in order to build something off a bottom, you do got to start somewhere creating a higher high and a higher low. Okay, the overall trend is, yes, it's bearish. But you see how we might be making a bigger double bottom here? Consider this all one bottom. There's our big neckline. We're coming down. We're curling here. There's the second bottom. But you see how it came up? It did create that high, but now it's going back down. So can we continue to build back up here and then do something like that? Possibly, but look at the sharp rejection. Look at it now. Okay, so it's coming back down to that ignited open again. Holy shit. That's a massive rejection. Okay, and we're also going into 8:30 very, very soon in 2.5 minutes. Okay, so look at that, guys. Okay, sometimes when you're scalping, you get a nice big bullish bar and you're going against the trend and you grab yourself 25 pips. There's nothing wrong with pipping and dipping out of there because this is where shit like this happens. It's happened to me a million times. That's why sometimes I tell you guys, I'm affected with the way how I live trade because I want to hold trades, scalps longer and longer. I want to see 50 pips. I want to see 100. I want to see that day when we hit 300 on gold. Those are fun days. But sometimes you get in a trade like that, and I know it's coming into a red box. It created that high, and then I don't do anything, and then it's back to either break even or comes to a stop loss. Okay, so you got to understand the scalper's mindset. So the scalper might be just trading one bar. Get in and out, especially if it's 25 pips. But regardless, if we're waiting, we're disciplined, we're waiting, we're not taking impulse trades, still building, we see a sharp rejection and we're back in here. So next body, can it pick up? Can it come all the way back up? But look at now the size of that wick. That's a rather large top wick. So that's showing a lot of exhaustion. So it's going to take another big, big, big bullish bar in order to fill that wick, get through that red zone and create a new higher high. So you're asking a lot for the buyers, okay? This candle now has flipped into like a shooting star bearish pin bar, okay? So sellers could close it down here and then we continue pushing down. Then we might have to continue selling, right? News in 2 minutes, yeah. Scotty, 25 pips is 25 pips. 100 I agree with you. 25 pips is 25 pips, just like how Scotty said. 4 by 25 is 100 pips. If you look for 4 of those candles in a day, you hit 100 pips. It's game over. Walk away from the markets. Let's do the same thing tomorrow. Okay. Yes, you're going to lose out on one of these, but if you hit 3, you're up 75 pips, for example. You lose 1. Okay. You're still up 50 pips, but maybe your next 2, you'll hit another one. You're up 75 again. Maybe your next one, you'll hit another one. You're up 100. Walk away from the market. Maybe tomorrow you have a shitty day. Maybe tomorrow you take 2 trades and they're down 25 and 25. You're still up 50. You got to compound that account. You got to protect that. And then, but once you get the ball rolling, like there's some traders that already have 1,000 pips, 2,000, over time. I'm talking over 3 months, years, And then when they take a drawdown, or a stop loss, they're so much ahead of the game that it's not really affecting them. Okay. That's why it's important to compound your account, get the ball rolling, because it's like a snowball. We talked about that analogy. I live in Canada. We have a lot of winter. We got a lot of snow here. When you're rolling snow down a hill, it starts small, but once that ball starts rolling and picking up more and more and more snow, that snowball gets big and big and big, and it could possibly run you over. Okay, so that's how you got to consider your trading account, your capital. Once you get that ball rolling, once you get $1,000, $2,000, $4,000, again, that 0.5% is still 0.5%. It starts now, it's more than $20 a day. It's $50 a day. It's $100 a day. Some of you guys are trading with 10,000 accounts. Some of you guys are trading with 50,000. There's some traders in the group that are trading with $250,000. Okay. 1% of a $250,000 account is $2,500 a day. They're eating steak and lobster. Life is good, but they could have started with a $2,500 account and built their way back up. Okay. So that's how it is, guys. I noticed I didn't sell that candle. Okay. It's news. It broke, but what I see is a higher low. Okay. From there. Okay. I don't see any bearish volume close yet down there. So it could continue to build its way back up. Gold is choppy right now. Okay. I'm going to be honest. This is not great trading volume. So someone will say, well, Ron, why are you not in a trade? My goal, I don't come on YouTube just to get in trades for the hell of it, or just to say I'm in a buy, I'm in a sell. I don't do that. If there's no trade, there's no trade. You guys got to understand that. What would you be trading right now? If you want to go in, you're welcome to go in. I'm waiting to see more what's going to happen out of here. Will an actual physical bearish bar close below this green box so that in fact I can go through the motions and make it red, maybe catch a retest sell off of it. If you're already in sells, that's maybe you already got in up here and you're holding it. That's perfectly fine. But I was analyzing for almost 90 minutes, and so I'm not in a trade right now. So I don't want to get into a trade right now. Just want to watch what's happening. I want to see, is it building a higher low near the lowest point of the day, right? Is it doing all this while it's going to come back and close above this green box? That's another clue that things could start to maybe reverse bullish with that bullish divergence that we saw. Okay. Now look at the candle. Okay. So we have another impulse higher low with a bullish pin bar hammer candle. Again, inside the green zone with 2 minutes to go. Will it close back above here? Okay, look now. So, and then sellers, did you guys do anything when it dropped down there? Did you pip and dip? All of that stuff. Look at this big bullish candle now coming back up. So I'm watching not just the wicks. I'm watching points of interest on these 5-minute candles, guys. Look. So there was an interesting point right here, where that bullish body closed and that one opened right there. I'm asking a lot for this bullish candle to come all the way down here, pick up a higher low and fill this entire wick. Maybe it can, but that's asking a lot from it. So maybe I just wanted to see if it can close above these bodies and maybe continue to build its way back up. Okay. So if it can't fill all the way that wick, maybe will it engulf this bar? Will it engulf this point of interest area? Can we turn this red line into resistance, into momentary support? Is it still holding as resistance? All of these questions will be answered in the next 60 seconds. Scotty, you bought that 1 minute candle. You're going 30 pips now? Yeah, it's fast scalping, the fast and the furious. Guys, leave us a like on YouTube. Okay, for real. If you get value out of what we're doing, it allows Dave and I to see that, you know, there's a need for this on YouTube. There's demand for it, right? If there's no support or there's the demand, I'm not getting bullish. Okay, you're gonna get Ron be one of these bearish candles, and I don't want to do that, guys. I don't want to be a bearish candle. Ron is a bullish ignited candle. Don't create the top wick where my motivation comes down, please, because we've got a mission to do on YouTube, and we want to get to 100,000. But I don't want to be grinding here until I'm 80 years old. I'm already 43. You can see I got gray hair. Ron wants to still be a young person on these lives. I'm gonna be coming here in my wheelchair. I'm gonna be wheeling in the wheelchair. Okay, so guys, we're stuck with gold right now. We'll stick with gold for another like 10 minutes, and then we'll move over to NASDAQ and US 30. We'll start to do some US indices. But again, you see, guys, okay, so it broke the green box, came up inside the green box. It broke again, higher low, building back inside. So technically, the volume is still consolidated in the zone. Buyers are buying, sellers are selling. It's coiling up, it's accumulating. It's not going to stay in here all day. It's probably now going to impulsively break for a new high. 4 minutes left on this. You're welcome to take an impulse trade if you like, or we're going to wait for volume to close. Okay. If you want to go impulse, I suggest go lower time frame. So at least you can watch that big 1 minute bar where it closed. 50% of that 1 minute bar is right there. Here it comes down, bearish ignited. You see short wick there it came down. Now it popped. So this could definitely continue to fill on the 5 minute backfill. So when you see that pop now, if you go to the 5 minutes, this is your 5 minute bar that could continue to backfill and continue to come up. You got 3.5 minutes to go on this. So you got a lot of time to continue to build on this 5 minute candle. That's how you can maybe get into an impulse trade, but you go down to lower time frames to see what's going on. If you're going to stick with the 5 minute candle and stick with it, then unfortunately what we got to do is we got to wait 3 minutes and 15 seconds. We have to. If we're telling ourselves we're waiting for this body to close, we don't want an impulse trade. That's the facts of the game. Okay, I know it could be a big blue candle. Believe me, I scalp the markets. I know what it feels like, where you see this big blue candle come up there, and you're like, shit, I'm waiting for this thing to close, and it's all the way up here. Well, then you gotta sharpen up your impulse game. You gotta sharpen up your intuition. Okay, because sometimes there's a time and place to take an impulse trade. You know, but you got to follow how it's building, put the pieces of the puzzle together. Okay. But regardless, I'm waiting for this bar to close. So I'll tell you ahead of time what I'm going to do. If this blue volume closes above this red zone, I'm not changing the size of the zone. I'm changing the color. I'm going to make it green. And then if it pulls back, if it comes back down in here, that could be the point of retest. That could be where buyers now that the market is positioning itself to get ready, doesn't want to buy the high, doesn't want to buy on impulse, wants to buy a pullback at a point of interest or a point of control. This zone is a point of control. You can see how it was bearish there, bearish there, bearish there, bearish there. Now we have our first bar that's breaking right through here, possibly going to close with volume above. So we're going to just change the color. And maybe we could look for a retest buy, but we'll also see if it's a fake out, okay? This could be a fake out where it does kind of close with volume above and then next bar is bearish and it comes back down here, closes below there, and then they fake out those buyers. That could very well happen. That's an option, okay? So you got to be aware of that too. Now we're getting closer to the close, 90 seconds. Let's just go through the motions. What did it do? It opened, it came down, higher low, came back to the opening price, broke the previous candle's high. We filled that big backfill, that big exhaustion wick. It did. How? Because it came up and it created that new higher high. But that new higher high is just for this consolidated trend. It's still lower than this red box. It's still lower than there. Now look at the response by the sellers. So if you took an impulse trade, you see what can happen. And you see what I mean. Like that candle, when it flipped, it filled up to 25 pips. impulsively broke out. But look at now. Now it's a bear shooting star coming down with 45 seconds to go. Will it close below here? And then I'm flipping this green zone red. You see how momentum switches and the games they're playing right now? That's why this is not a good trade zone. Okay, this is where you gotta be on top of your game. This is where if you want to play the game with the market makers, what I do is I use feeler trades. Guys, listen to the game that I'm spitting right now. If you want to play this game with the market makers and the algorithms and the HFTs, we can play that game, but be smart the way how you're playing the game. Don't go big sizing. If you go on a buy, don't go big. Don't go big. Nothing is confirmed. Just go micro sizing, 10 cents a pip. If you were in a buy there and now you're down 20 pips, okay, you're down $2. It's a price of coffee. No big deal. Clear the trade and get your shit together and let's go again. That's what I do with feeler trades. Okay. Yeah, they got me that time, but guess what? I use the feeler trade. So to the market makers, I say, fuck them. Okay. They want to play games. I'll play games with them too. And then when I figure out the move, I'll slam it with a standard, double, a 5 lot or a 10 lot. And I'll make my money back in coffee for the next few months. Okay. Do you guys understand what I'm saying? If you want to play the game like this, go small sizing, feel out the market. Okay, don't tell the market makers our secret here. This is our secret sauce. Don't give it away here. If anyone rats us, no, we're just joking. I'm not scared of no market makers. They can come visit us, no problem. They're mad that we're spitting game out and helping the public. It's all good. Joel, you'll do time for me? Joel, I'm Albanian, bro. I'm Canadian, born on Canadian soil, but my blood is Albanian. Okay, guys. So again, this is an impulse break. I know it's teasing us like, let's sell, let's sell. Yeah, it's an ignited bar pushing down, filling that way, but it could grab another wick and come right back up. If you still want to wait for the bar to close, we got to wait for the bar to close. You got to understand, it's if you're waiting for confirmations, this is the point of confirmations. You have to wait for the bar to close. I'm on a 5 minute, so I have to wait 300 seconds for this thing to close. If you don't want to wait for this thing to close, again, you can go to 4 minutes, you can go to 3 minutes, you can go to 2 minutes, you can go to 1 minute, and you can physically watch it, okay? So you see how the 1 minute bars, like that's why I like sometimes scalping 1 minute when it's 5 minute consolidated like this. But you see right there, it came back down. Now, these 1 minute bars, if I was trading the 1 minutes, that green zone would be red right now. But I'm still following the 5 minute bar and it hasn't closed yet, okay? And I'm going to stay with gold for 3 more minutes, guys, and I'm sorry. And then we got to start doing some NASDAQ and some US 30 work, okay? I know sometimes we're in a trading gold during this time, but for me, I didn't see a good setup, a good clean setup. You could have been faked out of those buys had we taken buys, possibly been stopped out of this candle. If you shorted that candle or shorted that candle, you were probably stopped out by that move up there. This bearish candle is just coming in right now. Will it close down in here? Yeah, we got a strong US dollar, very strong dollar right now. US dollar is strong, breaking out, okay? Our news, unemployment numbers, good numbers, okay? That's why we have a strong US dollar and gold is pushing down right now, okay? So remember what I said. 221 was previous week. They were forecasting an increase in unemployment, less people working. Look at the number. It came out green, good, positive. It's a smaller number from 227. It's actually 10,000 lower than their forecast. Okay, so that's great. It's also 4,000 lower than last week. So that's good. That's good. Less individuals applying for unemployment is fantastic for the United States. That's good. That's what we want. We want more people working, contributing to the economy. Then we'll see a boom in the US dollar and a thriving economy. That's what we all want to see. We don't want to see, I personally don't want to see people out of work, homeless, not having money to buy groceries. And I went through that. I went through 2007, 8, 9. I remember that vividly. I was young at that time. You know, I was just getting married at that time, and I lost my job at the banks, and I struggled. So I understand what it is. So I never want to see that any nation. We want to have good employment. Okay, so that's good. That's a first step in building a strong economy. Now, if inflation is going down, then maybe it will give Powell now the green light to lower interest rates 0.25%. That could stimulate the economy, stimulate everything, purchase borrowing power. Then you can start building homes and pay off line of credits and things like that. That's how you can get ahead. That's how things happen. So that's a good first step. That's why the US dollar was pushing up, and that's why gold broke down. But gold can just break down just due to that news. Remember, that's just weekly news. It's not like it's monthly or yearly unemployment. It's just over 1 week. I know it's fantastic, but you see, gold already sold off, but now it could just, that news is now released, and then gold could now start buying back up. Okay, so you see that candle, how it came all the way down. Technically, it was lower than that, so it did create a lower low, and a little bit of that bearish volume did close below this green box. So I'm going red box now. Okay, and you see it's already retested, and it could push down, but you got a lot of exhaustion wicks down here, so it could just come down and go right back up. So sometimes if you sell, it could be a good sell. You could get 10, 15, 20 pips, but it might not always fill down those wicks and go all the way down. Okay, it might pick up a higher low and come right back up. So you got to be careful here. Guys, I want to stay with gold because we've been with gold this entire call, and we can continue to follow this volume. But I know a lot of us have to go to NASDAQ and US 30. So I apologize, guys. I don't like doing this. I normally don't trade like this. I normally stick with one security and I follow the volume. But I understand that, but time is getting where we got to do our top down. So guys, sometimes we're already in a trade, but today I didn't see anything particular that looked good for myself personally. So it is what it is. It's a live trading environment. I can't change that, guys. I can't, honestly. I wish we could have had better volume, better pattern, and but that's trading, guys. So now, just if you're on gold, just continue to watch. If it builds back up here, what I'll do is I'll set an alert for myself. If it comes back in this consolidated zone, I'll have an alert in here. And maybe if it comes in deep into this green zone down in here, I'll have an alert in here as well. Okay, so then I can flip right back to the chart. Okay, let's see what Miss Jones is doing, Tony. Let's check out what Miss Pretty Jones is doing, and NASDAQ. Okay, so NASDAQ on the 5 minutes, you can see a nice clear M top with a liquidity grab. Guys, put this in your playbook. Take a snapshot of this. This is a very technical play right here. Look, I'll show you right now. This is, we've got to make a playbook, okay, right here. You got one top, neckline, support. Second top, okay, with a liquidity grab above there. That wick, it came spiked, took out all that upper liquidity, and then came back in the zone. And there's your M pattern, okay, M, break of support right there, right? And there's nice little clean move to the downside. This pattern, get to know it. This is your bread and butter. This is your bread and butter. If you see the opposite, a double bottom with a liquidity grab, that could be your buy. The double bottom is like this. 1, 2, okay? Let's say there's a liquidity grab, okay? And then does this and back up, okay? So you got, sorry for how I did that, but you got your support, okay, green zone. Guys, these are the most easiest plays to make money on, okay? Okay, so it came down one bottom. There's the neckline. It came down for a second bottom, but it broke, just like that candle right there, the opposite, and then took out all the stop losses, took the pending orders, came back up, traded in the zone, and then there's kind of like your double bottom with a liquidity grab, okay? So it came down, one time, neckline, 2 times, and then it's gone. It can break through that neckline and go with a liquidity grab, okay? So sorry for those drawings, but I just saw that how it just looked, and that's a visual pattern that you should be very familiar with. Okay, so let's get started with US 30 and let's start moving. So I'm going to do this analysis much faster. So I took my time with gold because I don't want to be doing this on every single call, taking my time like that. I just want to get into this and start charting and start trading. So here's a double top right there, all-time high, stretch it into the future. Look at, we traded right into it yesterday and we're coming out of it, okay? Do I need to continue to analyze down here? I can, but I don't have time for that, okay? That's what weekends are for. You got to do your thorough analysis. Another just big green zone I want you guys just to look at, that was bearish, 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 bearish. Now that we closed above, that's a bullish zone. Stretch it into the future. And I'm getting an alert on gold. Wow, okay. So I just got an alert on gold. Okay, so it's continuing to break down. Wow, okay. So it did in fact kind of close right below there. So this big green zone, if just going with the flow, supply coming back up, might get rejected at that point of interest, might get rejected back up there, might continue to push down. You can wait for volume if you were looking for buys, maybe to close back above here and retest this and make it green, come back up. Otherwise, it's selling pressure today. Look at the daily candle. My goodness. Okay, so gold is really pushing down. Sorry, guys. I just got that alert, so that's why I came to it. Now, points of interest on the daily on US 30. Okay, so are we building a second top now? That's interesting. Key neckline is right there. Okay, yellow daily. We're pushing up. Higher low, higher low, higher low. Again, some interesting points, okay, of interest on US 30. I would go with one right there. Okay, I'm not going to explain myself why I put it there. I'm just going to put them. Okay, maybe that's what I got to learn how to do, guys. I explain. Guys, what do you guys think? I'm going to ask you. Do I explain like enough that you guys understand? If I place a yellow line there, you guys know why I'm placing it there. I don't need to sit and explain every single touch, bar, body, wick. Just let me cook. And then we can get shit done on these calls and we can be more efficient. If you guys are confused what I'm doing, we'll just watch one live. We've been doing this for the past 6 years, okay? Every single live has a nice thorough top-down analysis. I'm sure you'll learn. I use the same colors, so you'll see purple, you'll see yellow, you'll see white, and then red is on the short times, okay? Now, let's just get involved in what we're doing here. Okay, so yesterday, big bullish candle. Bullish, bullish, bullish. Traded right into that all-time high zone. They rejected it. Look at where it closed. It closed. That's where I placed the yellow line. Closing price, opening price today. Was it initially bullish? Yes, it was. Tiny bit. So it was bullish. That's our daily high. It couldn't backfill that wick. We're in that all-time high supply. And look what's happening now. We got a big bearish response by the sellers that pushed it all the way down so far to the lowest point is right there. Okay, we're heading into Wall Street soon. We might find a bottom. Will it come back up? Maybe. But again, we've got a lot of selling pressure that could absorb the buyers and continue dropping. So just like gold, how it broke the low day, we continue dropping right here. This point of interest on the yellow line, but more importantly, the start of yesterday's daily candle right there. That's a real big point of interest. And then I would be looking at 50% of this bullish body right there. I would have also a point of interest right there. You know, like this is how I do my grid system right there. Okay. And then what I got to base everything off of is yesterday's bullish candle. I know we traded in the all-time high supply, but yesterday had a lot of bullish volume. Can we find maybe a nice good point of control on yesterday's bullish volume to see if our buyers can step in today? We're right inside that zone right there. Okay. You see right there's 50%. And then if I just go from that yellow to that white line right there. So we're trading, in fact, right now in this bullish point of control that is, we're going into Wall Street in 35 more minutes. So we're trading right into it. Okay. So we have the red all-time high supply above us, but we're trading in the bullish volume of yesterday. So if the sellers continue to break, maybe down to there, we'll see maybe buyers step in here at this yellow line, maybe buyers right here because they want the bottom neckline is there, but more of a neckline is more concentrated right here and then coming right back up, double top with a liquidity grab. Okay. So they broke it yesterday, grabbed the liquidity, and look at where the body of volume is right in here. That's our second top. Now we're coming down. So you know when I'm looking at an M pattern coming down like that, we've got, will we find support here, support here, support there, support there, support there? Will it come down? Will it go back up? Or are we coming all the way down? Okay. If you want to pick now, this is where pay attention, guys, please, to this. someone says to me, well, Ron, look at all these lines. How do you figure out a point of interest from this bullish candle, this? See where it started right there? Right there. The candle right here, Wednesday, July 16, the start, and where it just ended right there yesterday. Grab your Fibonacci tool, and what we're going to do is we're going to add up all of these bars. 1, 2, 3, 4, 5. These bullish bars that moved all the way up, we're going to find the point of interest on these 5 bars right there. Bring your Fibonacci tool from the bottom of that bullish candle to right up to that volume. You see now I got a precision zone. If it comes in, this is where the bigger buyers are. Okay, they're not playing these little yellow lines. So it's more for the intraday scalpers. But the big buyers, they're waiting right here. Okay, let me show you where these guys are. Okay, the 618 of this entire move and the 382 is right there. Okay, so inside here, that location, okay, that's your fair value gap, your bullshit zone, whatever you guys call it, okay? If we trade into here, those are the big buyers anywhere in here. I would write psychologically right in the middle. That could see that move right there. When will it get down there? I don't know. But when it does, you better be ready. Okay, so how do you get ready for that? Place an alert in there. Okay, where if you like that yellow line, see now how I'm moving, manipulating my yellow line right in the middle, adding an alert. Okay, are we cool on that, guys? Okay, so second top could be being created on the daily now, but we got to continue to watch. But we're trading in that bullish zone from yesterday, okay? So I'm not going to continue to do any more daily analysis. If we do flip the candle, we could fill yesterday's and continue to go higher. But on the hourly, anything interesting coming out of futures market, London, that we got to make note of? Look at this beautiful higher high, higher low, higher high, higher low. This was yesterday, Wall Street. Come all the way. What was the highest point? 3 p.m., okay, power hour. And then when did they start dropping the market? 4 p.m. Was there anything that happened at 4 p.m. in the New York Stock Exchange? Tesla and Google had earnings, if you guys remember correctly. So we started to come down bearish. Consolidation. There's, the futures market open up, consolidating, push down, lower low. Where was this big candle? 6 a.m. So it pushed up. That's what created the high of the day. We're pushing down and 3-bar plate, continue to push down. Now you see we're trading in that hourly area where we were consolidating that started that uptrend. So if we lose this today or consolidating here, this could be making, again, a head and shoulder. Remember what I said? A funky head and shoulder pattern, left shoulder. All of this is like a funky head, but now we're trading right back into the shoulder. So if it trades in here, we might be dropping down further, right? That's a head and shoulder pattern. However, if they bring it back up in here, maybe retest this, we could travel back up to trade up here, okay? So we're trading in here. Is there any hourly point of interest that I'm interested in? See this big bullish candle that started that big move up? Can I figure out 50% of that nice big bullish candle? Right there, okay? So I'm drawing a white line representing right there, 44,799. Nice psychological number. There's a white line. Sorry for all the lines, guys. I know I'll remove all this. It's the Rananachi tool. Okay, so there's the white line. There was support. Now it's resistance, 800. Okay, so if we come back up here, that could be where now sellers are to push this move back down. Okay, right around there. If it goes back up, there's kind of hourly points of interest. Okay, if I'm scalping my way back up, I got to understand right here, this 44,850 area. It could come past this white zone, come right up there, then the sellers push it back down. Okay, so let's now go on to the 5 minutes. And we're going into 9 a.m. And so we've had this nice big drop right there at 6 a.m. That's created the highest point of the day. Came down, came back up, pushing down. I know it's a lot of zones in here, guys. That's why I don't like having all of these green, red boxes. It might throw you guys off. But I'm just going to leave it for now. And what we got to do is we got to kind of figure out what's going on in Wall Street. So we found a bottom so far at the lowest point of the day. Will it come back up? Will it create a double bottom? Then we get that explosion at Wall Street, or is it just going to come up now and then Wall Street drops the move? That's what we'll watch for. Okay. So just adding daily bar indicator, just give us heads up of how things are moving on the daily so we don't forget. Opening price made the high of the day right there, 6 a.m. Push down all the way down. We're at the lowest point, and right now we still have this big bearish body. So if we're going in buys, we're countering the daily candle. Okay. Yes, it could be short-term buys, but we might have to pip and dip unless we see 2 bottoms or 3 bottoms being created to continue to push up against this bearish volume. Yes, some days I've seen candles like this on the daily, and we bought the wick and it's flipped that gold day, and it turned into a bullish hammer on the daily and flipped for over 300, 400 pips. So yes, I've seen candles flip. I've seen it, so you have too. But overall, what we see is sellers are in control today, okay? Adding, I know some indicators, 9 and your 200, we're below both of those, okay? So that's US 30. Right over here, we're keeping US 30, Miss Jones to the left. Let's do NASDAQ. I'm going to do NASDAQ a different way, okay? What I'm going to do is, I see the 5 minutes. I can see clean structure. I can, like how I showed that M top, I can see right there, whatever. But what I'm going to do is I'm going to show you a new analysis using this SST daily bar indicator. It shows me the past over here. It shows me exactly where we kind of opened today. Right there was the opening price. There's my yellow line. I know that when it opened, it was initially bullish, which made the high of the day. There's the high of the day. And then when it hit the high of the day, it was all this bearish momentum where we just right there technically hit the low of the day at 8:45 just now. And we see that there is some buyers on the 5 minutes pushing the daily bar back up. Is there any now structural areas in between all of this stuff? Yes, there is. Right here was structural area right there where I was talking about at the start of the call. Came up, back down, came up, back down. So I'm just stretching that beyond today's daily candle and into the future, and I'm making it red because it was supply there, supply there. So if it comes all the way back up there, it could be a third time supply. That might be an opportunity to sell, where you're selling right below the opening price. You're selling down with those sellers that are protecting the daily bar indicator, okay? That's one point of interest. What about where kind of pushed down right here and then kind of consolidated and held support for quite a bit in there? When that bearish bar closed below, it's a red box, continuing that green one, that bullish bar above, green box, just going all the way across. Again, same size box, same zone, just stretching it now. That could be an area of interest to sell. If it comes right in there, we could sell right there and continue to go buying. If it closes above there and moves its way up to the next zone, that's my balance fill right up to there. Could be approximately 20 pips to get up there, but not much big volume on the daily bar indicator right now. Now we got point of interest. Again, another kind of maybe zone. See how I'm just now figuring out some zones right there where it came down, held. Okay, so if it held there, maybe we'll hold in the future. Now you see that this green zone is kind of representing 50% of this bullish candle that just closed and the retest. So now I got one bottom already intact, okay, already established low of the day, coming back up. Will the neckline be somewhere inside here, or will it be the red zone? This is where now I'm watching to see how it's building leading into Wall Street, okay? So we'll watch NASDAQ, we'll add some indicators, okay? And we'll keep it side by side with US 30 right here. And I'm just looking in the pre-market if anything is of interest in the pre-market. Let's see what we got going on. Google is up 3.7%. They had earnings yesterday. They're up in the pre-market. Everything else is pretty flat. The only other big name is Tesla. Tesla is down 6.7% right now, just under 7%. Okay. Scotty, United Health is green, Dow is dropping. Doesn't make sense. It's pre-market trading, okay? wait for market open then. Wait for market open. Sometimes the pre-market volume, Scotty, is thin, very thin. So, it can't base everything off of it. We'll wait for the market open. Okay, so we're watching, guys, NASDAQ over on the right here. Sorry, I'm just trying to keep it so the daily bar indicators here and US 30. Gold, let's just take a peek at gold. Okay, so gold had that big drop down. Okay, so it came down to, broke through that zone, came down to 3,350, 51. Good psychological area, that daily point of interest. We're coming right back up now. So again, is it going to close above this zone? Like all these little red lines you can start to remove. This is where I'm cleaning up my charts. So this is where cleanup time, I always tell my kids after they're done playing, it's tidy up time, start cleaning up. And so look at the pair's trend, okay? So starting all the way up here, you got lower lows, lower highs, lower lows, lower highs, lower low, lower high, lower low, lower high, new lower low, okay? So how much more of this are we going to continue to push down? Like eventually, we got to continue to watch if we get back in this trading channel. But it's going to be interesting to watch gold today. I'm actually want to see if on the daily, gold is very, very interesting. Okay, why is it interesting? Because look at it's just the blue team was winning these 2 days, and now this black team is winning the next 2 days. So we're right back to the starting position of this week. So this week was that huge bullish move Monday, Tuesday, and Wednesday, Thursday are retracing that entire move. So this is where it's going to battle. The sellers are going to fight here, and the buyers are going to, if they want to protect the weekly position, there's going to be a battle here. Are they going to bring it back up today? Or are sellers going to close it with follow through and authority down here and then break that daily trend line? And who knows, maybe tomorrow gold is going to have a big, substantial sell off. Okay. But that's interesting. And it's 4 times in that all-time high supply zone where it's been rejected. So this could be some serious selling volume, like when we always say it's like staircases going up, but it can be an elevator coming down, right? So I'm interested to watch gold today, how the daily, the higher time frames will be closing today and tomorrow going into the weekend. Very interesting. Okay. So, but we're going to stay with the indices for now and watch how these things are moving into Wall Street. Okay. Okay, did you guys learn a little bit about price action on today's call? Did you guys learn something new, at least, that you didn't know yesterday? If you did, that's the power of education. Anytime you can learn something that you didn't know yesterday is a pretty good day, in my opinion. Not every day, I don't judge my day every day just making money. I judge my day, if I learn something new, that's a good day. Are you guys in any trades right now regarding NASDAQ or US 30? Anyone in a position going into Wall Street? Guys, thank you guys. 160 likes is awesome. If we can get it over 200 likes per call, that would be amazing, guys. Thank you. From Dave and I at SST, we appreciate that. Thank you, guys. That's respect. I like that. So I appreciate that because then you guys are actually wanting to learn when I ask that question. So that's good, guys. It's always important to just continue learning, not just with trading, with other things in life. Just continuous learning, being better every single day will help you become a better person and more disciplined. That's what we got to learn as traders is discipline. If you lack the discipline, trading is going to get difficult. Trading will be difficult, I should say, if you lack discipline. If you lack risk management, trading is going to be very difficult for you, okay? But if you have good discipline, you got good risk management, you can make trading a lot more easier on yourself, okay? I can physically say, I can seriously say that. And I hate to use that word easy or easier because trading is not easy. It's not. But you can make it easier for yourself by just lowering your risk and then looking long term. Don't think about becoming filthy rich in the next week, month, or year. Okay, I know everyone has those goals. I want to do this in 6 months. I want to be a multimillionaire. Everyone does, but maybe you can still become a multimillionaire in 5 years. Maybe it will take you 10 years. Maybe it might take you 20 years. But that's what you work on. It's a long process. It's a long game. Some traders can do it fast. Like, I'm not going to lie. I've seen traders in less than 3 months, 6 months, 1 year become a millionaire. Just high leverage, take some quality setups. The market was with them and they ended up doing it. So it is out there. But when you hit those drawdown trades like that in a highly leveraged environment, you got to have the stomach for it. Some people have that stomach, others don't. Okay, so any buys, any sells, anybody? Efren, you're waiting. Okay, you're trading US 30. Efren, Sherry, you do US 30 or NASDAQ? Have you switched it up, Sherry, or sticking with one? Kyle, what are my opinions on trading books, like the popular ones, or does it just add more fluff? No, trading books. I got a couple here if I can find them. 1 second, Kyle. Let me see. I let my buddies. Some of my buddies have my good books, Kyle. One of them is Trading in the Zone by Mark Douglas. That's a really good one. This is a good one too. Where's the camera at, Kyle? Right here. Psychology of Money. This is a fantastic book, guys. Highly recommend everyone picks up this copy. It's called Psychology of Money. The author is Morgan Housel. Fantastic book. Great book. This one's also really, really good. This one here, Think and Grow Rich. This one right here by Napoleon Hill. This one is a fantastic read. I read this thing when I go in the sauna on a daily basis. And if you guys want to read an old school classic, if you guys can find this paperback copy or like the original, good luck. But this one is an old school book. This is called Rampaging Bulls. If you ever want to learn about like pump and dumps and the pennies and penny stocks and how some companies can be corrupt, this is where it all started for me. This book right here by Alexander Tadich. This is a good old school read. If you can find a copy of that, good luck. But there is audio versions available. But the best one, in my opinion, is Trading in the Zone by Mark Douglas. That one is audiobook when you're driving your car is fantastic. If you're driving to work, driving home, if you got a long drive, put that on. It's about 7 hours long. But that one will get you in the right mind space. It's a great one. There's also, guys, if you guys want to mention any good books that you read about trading psychology, mindset, drop them in the comments, drop them in the chat so that we can all, maybe there's some books I haven't read that I'd like to read that you guys mention. Anything to do with mindset, psychology, I believe are the best trading books. Like technical books are good too, teach you what a bullish engulfing candle is and what a wick is, but those emotional books that teach you Naked Trader. I heard about that one, Trevor. I heard about that one. Oh, that's a fantastic one. Rob Mack. Yeah, guys, sorry. Rob just nailed another classic. The one by Tom Hogarth. Best loser wins. That's another one. Rob, my buddy, has that one. He's reading it right now. But that one, guys, put that one on your list as well. Best Loser Wins by Tom Hogarth. That one is another classic. Yeah, that's a great book. Okay. Good, guys. Yeah. Guys, read. Reading is knowledge. You'll stimulate your brain. Your brain is a muscle. Just like you work out your biceps, just like you work out your legs. Hopefully you don't skip leg day. But you gotta work out your brain too. You gotta feed it nutrition. It wants knowledge. Your brain wants more and more and more. That's how it grows. That's how it gets stronger. Okay. If you neglect your brain from stimulating it by reading, learning new stuff, then you're not gonna. I don't know what to say about that, but your brain is a muscle. It wants to learn. So keep learning, guys. Don't stop. And don't stop. I heard someone say, "Oh, I'm getting older. I don't need to learn anymore." No. My parents are in their almost 80 years old and they're continuously learning. I'm teaching my dad about options trading. He's going to be the oldest option trader. No, we actually have someone older than my dad here, 81. My dad will be turning 79 August 1st coming up. So I'm going to have a big birthday bash for him in our backyard. We're roasting lambs. We're Albanian and my dad made like a motorized with a chain. You put the lamb in there and it's roasting. It's going to be a big backyard barbecue. You guys are all welcome to come. Lots of drinks, lots of food, lots of good times. It's going to be a good time. If you guys want, come by my place and we're going to enjoy Pop's birthday. Oh, Vadia, I've never heard of that one. Fast Lane Millionaire by MJ DeMarco. Is that a song or is that a book? It looks like DJ DeMarco. I used to know a DJ. It was DJ DeMarco. Sounds like a good song. Fast Lane Millionaire. I hope it's not a hip hop song and you're embarrassing me on here. I hope it's an actual book. I know some of you guys try to embarrass me on here. Rob, it's a New Zealand lamb. New Zealand lamb. Yeah. Sherry, you don't eat any bread. That's good. Keep those carbs out. That's where you lose the weight. Sherry, do a little fasted cardio first thing in the morning. That's where you're going to shed everything off. You're going to take all that stubborn fat away. First thing in the morning, do some high intensity for about 15, 20 minutes. If you have an exercise bike, go 2 minutes fast, take a 30-second break, 2 minutes fast, 30-second break for about 20 minutes, and then have your breakfast meal. And that early morning high intensity can get you to lose that stubborn weight. Dave and I used to compete. I used to do physique. Dave used to do bodybuilding. So we used to weigh our food. We had a scale. You had to weigh like 6 ounces of chicken breast, a cup of basmati rice, unlimited vegetables, 4 of those meals per day. And then post-workout, either you have 6 ounces of ground beef, lean ground beef, or steak, and with some sweet potatoes. Oh, that was my go-to. Those sweet potatoes. Oh my God. When you're dieting, something sweet, because you gotta take out all sugars, everything out. When you have that sweet potato, it's the best feeling in the world when you're restricting your calories. It's like dessert. It's like a treat, but it's very healthy. Joel, 600 grams of beef and 6 to 8 eggs. Nice. Scotty, what are you doing? 150 grams of rice, steak and eggs, sweet potato fries. You got it, Scotty. There you go. Awesome, guys. Yeah, staying healthy. If you eat healthy, you stay disciplined. And you can use that discipline in trading. If you're a disciplined trader, you can use that in your dieting. You can use it in your training. You have a routine, right? In trading, we need to have a daily routine. So all of these things you can utilize in everything else you do in life. So the disciplined approach is good for everything we do. Guys, sorry, we're talking about silly things here. But right now, the market is still consolidating. Okay, NASDAQ, I'm still following it, guys. You know, I can talk and still follow what's going on. Hopefully you guys are too. So we'll see what we get out of market open in the next 10 minutes, okay? Yeah, a lot of people, Joel, I get that a lot. Everyone says to me, well, chicken is expensive. You know, I go to Costco, I buy the club packet chicken breasts. It's 35 bucks. It's got a lot of chicken in there. Like that can, if you're doing like your portion sizing, you know, you're prepping on a Sunday and you leave it in the fridge, your meals already prepped, that could take one person, all that chicken for 1 week, right? And that's 35 bucks. If you go to McDonald's, a McChicken Big Mac combo where I am is 15 bucks and you're eating McDonald's, right? And after you're done eating it, you're hungry again, right? So guys, it's cost effective to eat healthy. I know everyone says, well, steak is expensive. I know it is, but I rather spend 10, 15 bucks on a steak than eat $10, $15 at Burger King. You know what I mean? So it is costly, but when you start to see the results, you're going to start to get addicted to that and buy healthy food. You know, like chicken is healthy, fish is healthy, shrimp. That's where you can get your protein source. Ground beef, lean ground beef. If you're a vegetarian, like I'm not a vegetarian, but I understand organic stuff, vegetarian is expensive. I know, but junk food is expensive too. That's a good book too. Rahish, Think and Grow Rich. That's a good one. Yeah, that's a good book. Sergio, McDonald's is crazy right now. like like a McDouble is like 5 bucks. I remember those things used to be on the value menu. Like they were 99 cents for a McDouble. Now they're 5 bucks. I remember a Big Mac used to be like $3. What the hell is going on? Oh, sure. Every now and then you eat some potato chips. One thing that I was doing while I was competing was on the weekend, I had one cheat meal. The coach would allow me one cheat meal. I could go eat a pizza, McDonald's, Greece, whatever it was, but just for one meal on that Saturday. Okay. It was kind of like right after a leg day when you really go hard on your legs and then you need to refuel yourself. It's called like a refeed meal, but just one meal. You could go all out. And there was a dessert. I used to have my raspberry cheesecake with that. And then you would see your body, how it would respond to that. Because when you're calorie restricted and on a diet all week, and then you force that calories, that cheat meal in you, yeah, you'll get so much energy. It's unbelievable. It kind of like recalibrates your system. It gets your metabolism working again. It's like an engine. You refuel it. Your metabolism now works in overtime to get rid of all that grease that you just put in your temple, and then you actually lose more weight. It's unbelievable how the process of losing weight works. I never thought of that, but I was looking forward to that meal every single Saturday. I worked my ass off for that meal. And when I had it, oh my God, did I ever appreciate that? Weekend cheat meals like no stop loss weekend. Yeah. Um, okay, guys, we're about 7 minutes out. Okay. So what's going on US 30? We're consolidating at the lowest point of the day. Okay, on this big bearish candle. So are we going to continue to drive down, or are we going to see maybe a little bit of a counter move back to the upside? I'm not saying we're going to turn all the way bullish, but the market could come back up and then go back down. But it could be a nice move to the upside. For example, just above this hourly point of interest right here, like just going up to there, 60 pips. If we come back up to just retrace, that could be a 100 pip retracement. Then it could definitely go back down from there. So we'll be watching these key areas. Also, NASDAQ too had that M pattern that physically broke down. but it created that low of the day, came back up, and it's closing inside. Okay, so if it comes back down, we might find the double bottom down in here. I know it's nice, like right now, like if this was any other time, I could be looking for a buy right now, but it's just so close to market open. You remember I got clapped yesterday when I went, and guys, someone said, Ron, I was revenge trading yesterday. Sometimes you got to get the real dog out of you. Sometimes the dog has to come out once in a while. So I took the 3 strikes yesterday on yesterday's call. I got mad, yeah, because I got stopped out by those market makers by 1 pip, and then it dropped, and then I had to go in heavy on the next one. So yesterday I apologize for yesterday's session. It was a little wild. That Ron was out of character yesterday. That's not normally how but yesterday was the dog had to come out. I'm sorry. So once in a while, you got to release the hound, and it's got to come out. I don't have pets, but I know Dave's got dogs, and you got to let them out once in a while and let them go out and play. So yesterday I had to come out and play. Is it a 4-strike baseball today? I don't know. I don't know if we're playing baseball or cricket today. I have no idea. I like the name, Mr. Asparagus. I used to eat lots of asparagus while we were training. And if you guys know about asparagus, yes, your pee will stink. It does happen. I remember I was at a restaurant, I was peeing in a urinal, and the guy beside me is like, man, you stink of asparagus. And I felt so embarrassed. I'm like, I'm dieting, man. And that was a conversation we had in the urinals with another male. It was, hey, guy, that's what happens in the washrooms, guys. If you eat asparagus, be prepared. People are going to smell that pee. And it's healthy, but it goes in you and out of you real quick. Tonta, does that to you? It is what it is. I don't know what it is, but it's part of being healthy. You're going to have, I look at it as like your pee is very healthy if it smells like asparagus. Miguel, have I tried the mental meetings described in Think or Grow Rich? No, I haven't. No. Detox, yep. Rob, you can't handle asparagus? Oh, grilled on the barbecue with a little olive oil and some cracked black pepper. Oh my goodness. I think I'm going to go out for a barbecue at 10 a.m. today. Right after this call, I'm going to throw a steak on there with some asparagus, some sweet potato. Oh man, what a breakfast that's going to be. Okay, so we're kind of just consolidating right in here. We're getting close to 5-minute market open. NASDAQ is already making a move, okay? So remember, they're not the same securities here. NASDAQ is NASDAQ. This is more tech related. And then US 30 is a big mix of everything, all sectors, okay? You got financial sector in here, financial securities. You have oil and energy, you got agriculture, you got retail, you got everything in here, everything. A little bit of tech as well. Good question, Christoph. Do I continue scalping on my own or walk away when the call is negative? Like I said yesterday, I always figure out a way, Christoph, to come back and grab my liquidity. I'm not saying that to be cocky. I'm not saying that to be arrogant. I'm just telling you the honest truth. If I do have a negative day and it's like a really negative day, sometimes I just got to walk away and I don't come back. I just clear my mind and then I'll come back the next day more positive. But some days, the dog comes out, Christoph, and then, after the call, I might go for a walk and come back. Like let's post New York, have my alerts set up, walk away, not like revenge trade, but come back when I get alerted, look at and then see if it's a suitable setup, and then if I had to go back in, yes. But I gotta determine that when it happens. Some days I'm really, really like, when you're you're in a bad mental state when you have a bad losing day. In those days, I gotta ask myself: is today the day I'm gonna walk away and not come back, or is today a day where I review my trades and I say, they got me there, but it wasn't like really my fault. Maybe they just got me by my stop loss by a couple pips, but I'm still sound. I can come back and get my money back. The volume is moving. Again, I look at how the volume is moving. If I come back and it's choppy, that's going to be a recipe for disaster. If I come back and it's clean trading volume, you can definitely come back. As long as you're level-headed and you're not upset and you come back, you're calm, you can treat it as if it's a new trading session. But your goal is to recover your losses, then end the session. That's the goal of that, okay? And I know it's a great question, Christoph. But things change, routines change. As disciplined as I want to be, and sometimes I just want to walk away, like you saw yesterday, guys. That was a real live trading session. I took 3 losses and I came back and I told you guys I was stepping up with a bigger size to regain all of my lost liquidity. I told you guys before I even did that. So, things happen, guys. I want to try and stay as disciplined as I can, but, sometimes the dog's got to come out. Okay, here we go. Wall Street market open, 9 seconds. Remember, 9:45, we have US red folders, flash manufacturing. So just understand it's going to be very volatile for the next 15, 20 minutes, okay? So look at that. Like it just opened bullish, boom, came up. Now watch what. Are they going to take out the low, take out the highs? They're going to continue to go up. If you kind of want to scalp your way up or scalp your way down, you could follow this volume. If you want to wait for this thing to close in 5 minutes, highly recommend we wait for the close of this. If you want to go lower time frame, jump in the 1 minute, you can watch how the 1 minute bar is closing right now. Like it could be very, very fast, but I don't suggest it unless you have experience. Okay, NASDAQ is making its move. Okay, so it's coming right up. It opened, came down bearish, picked up, filled the wick, driving. If you're not in a trade, let's watch. Is it going to be like a third top up here? Is it going to fill that wick? Is it going to hit that daily point of interest where the opening bar of NASDAQ is right there? Is it going to come tumbling back down? Okay, so lots of things to look at. This is the first 1 minute, 50 seconds. Okay, we're not even in a 1 minute close. And this is the volume right now. Okay, so don't stress out. I know a lot of traders say, oh, Ron, we missed a buy. Yeah, you missed a buy, okay? That's what it is. What do you want me to say? I know I missed a buy there too. But if you have a rule where you're waiting for 5 minutes, you're waiting for 5 minutes. I can also say, yeah, we could have had a buy, but if you didn't do anything at that red box, it came back down to where you entered, you're at a break even or a stop loss. So we can play the woulda, shoulda, coulda game all day long on these calls. But look at now. So now what did they do? They swept the highs. Look at it, how bearish it is now coming down. Okay. So I'm not in a trade. I'm not stressing out. I'm not emotionally attached to any of this. I'm still on the sidelines watching. What has US 30 done? Absolutely nothing. Just came up, fake out up here, fake out down there. The volume is still inside this consolidated zone as if Wall Street market didn't even open up. This could just be a 5 minute spin top candle. We could have kept talking about asparagus pea and eating chicken. Like, you know what I mean? Like, just guys, don't get caught up if you miss one move. It's not the end of the world. Just continue staying focused. Watch what's happening here. Look for clues. Where will this bearish bar close? What's going on? Will this bar close above here, down here? Is it going to close inside here? Do we got to wait another 5 minutes? And then don't forget, guys, when we get closer, 8:45 right here, we got 2 US red folders, flash manufacturing, big red folders, okay? Now the US dollar is dropping from that initial pump that it had. Gold could be building right now, guys. Okay, so flip your zones. Like, I know we're not on gold, but guys, go through your motions. You could be in a buy right now on gold breaking out here, okay? Okay, so US 30 is pushing up just a little bit here. Maybe it comes up, this is a counter move, and then it comes right back down. Okay, now we're getting closer to the close. Now we got a minute 55. What do you got, Rob? GBP USD buy, nice. I like that. Good job, Rob. Oh, nice, Danny. I didn't see that book. I'm sorry. Jeff Booth, The Price of Tomorrow. Nice. I'll take a look at that. Okay, so NASDAQ is pretty nasty. That's why they call it the nasty. It was nasty up there. It's nasty down there, and the volume is still inside here. Tesla is down 9.2%, down to $301 per share. Okay, so lots going on right now. Okay, now that the markets are open, I'm just looking. Tesla, big one. Google is still up 3.4% right now. Tesla, holy shit, almost down 10% right now. Okay, Tesla is a big part of NASDAQ. Keep that in mind. Wow. Okay. So Tesla's on the headlines today, down 10%. Will it recover, or are shareholders fed up with Elon Musk and his BS and shitty sales and no demand for his cars? That's going to take a hit on his shareholders and the share price. And it's at that $300 mark, that psychological area. China is eating Tesla's lunch. I know that. Yeah, they are. Okay, 30 seconds now to go on the close. Again, pick your security that you trade. I personally like to trade US 30 over NASDAQ, okay? That's just me. But I'll trade NASDAQ if I see good setup. I don't like NASDAQ right now. It's too, look at it. It says huge range spin top bearish candle with no volume. Not the greatest candle to trade. If this was any other time, I wouldn't be trading that candle. Why do I need to trade it now during Wall Street? Okay, so again, that's too much indecision. I don't see good path of vol. It's still now maybe a bigger bigger structural area. Down, holding green box, back up, red box, coming back down. Will it get a higher low, double bottom here, move its way back up to fill that upper wick and drive? Or is it coming back down, close, drop? Yep. Okay, so those are, now the zone is opening up a little bit. This is the first US 30 candle that did close above. Okay, so we came down, created that higher high. Now if it comes back to maybe retest in 50%, like right there, will it hold? Will it continue to go back up? Or is this going to be a US 30 fake out and then it's going to come right back tumbling down? Okay, so right now it is holding in the green zone. It got a retest. I'm going to go in a buy just to see if I can scalp it up to that white hourly line. I'm going to place my stop loss below the low of the day, below all this consolidated volume. Okay, and I'm going to see if I can get maybe US 30 moving a little bit to the upside. And I understand it's at the neckline. It could definitely come back down. So I'm giving a little room to breathe. I'm using a smaller size. When I open up my stop loss like this, I'll tell you guys if I'm going in aggressive with a bigger size like yesterday I did. Today I'm just feeling out the market, just testing things out. I just have a protective stop below here. I know fully well I could get stopped out very easy. That's why I'm not risking too much on this trade until I start to see more develop. But my bias is a little bit of buy side just to come up through here. I'm not asking to flip the whole entire daily candle, but maybe up to there is 40 pips. If it can get up to that, hourly is about 50 pips up there. Now we're actually retesting 50% in here. And the 9 EMA is there too. Okay, so when you're looking at indicators to help you with some confluence, the 9 is there, 50%. We got that point of control now intact. So now all we got to do is continue to push with some good volume, maybe close above the previous high, build off of it. We might have to come back down and retest this. Okay. We got 2.5 minutes to go. And then I know that we're leading into that high impact news in the next 7-8 minutes. So if I can get it up to there, 30, 40, 50 pips, I'm going to take my stop loss, go to a break even, maybe scale out 80% going into that news, because that news could, just wash away everything. So I know I'm trading into news as well. That's why I'm just kind of looking for just a little scalp buy, just move it up to there quickly. If it's not there, that's why I didn't risk too much on this trade, because I know then if I get stopped out during news, I'm not risking a lot, okay? Okay, and then second bottom here on NASDAQ, let's watch if buyers are there protecting that, or if that bar actually closes below there and continues to come down. So we got a wick and a wick down there for NASDAQ in the green zone holding. We've got kind of this little inside spin top candle, created that high, came into the point of control 50%, coming back up. We're back to the opening price of this candle. So, it's a coin toss going into the close. Who's going to close it out? Who's going to follow through? The buyers or the sellers? That's with these indecision candles. You don't know until we actually go into the close. Sometimes too, when I'm scalping the markets, if I don't like the setup, like they didn't have the power on coming down, sometimes I exit the trade myself prior to it hitting my stop loss. Like I see there, sometimes I don't like it. You'll probably hear me on some of the live calls. I take myself out if I do that. In this situation, I'm letting it go with a stop here. But sometimes when I see that where it came up and then it came back down, it tested 50% and went back up, then they rejected the second time. Sometimes like that, I've seen enough, and then I'll get out of the trade because I see that they're not protecting that point of control. They had 2 wicks down there that they could have taken it up here and they didn't. So sometimes like that, you'll see me say, hey guys, I'm getting out of this trade. I'm going to take a stop right there, but I'm not going to take a full stop. So just so you guys know on future calls, if I do that, I'm just giving you guys heads up that I do that. Okay. I'm not a trader always just to trade straight to a TP or straight to a stop loss and whatever happens, happens. No, I'm trading inside. I'm watching what's going on. If I don't like the setup, I will manually take myself out. I'll accept the loss and I'm out of the trade. Okay, so just so you guys know for future that's how I trade, and it could happen on these live calls. Okay, so this is an ignited bar breaking. I think it's going to fill these wicks, and then that's why I want to take myself out of this trade because I don't want it to dump all the way down. Okay, so just know I'm very well going to get stopped right out of this. I'll verbally let you know as soon as I get stopped out. I'm using a different broker than you see here on TradingView. So my candlestick is just a different number. I'm not looking at the number. I'm looking here at my wicks on my candle. Okay, so I'm still in it. Okay, so good bottom there. Okay, higher low, pushing back up, but I kind of need that bullish volume to close again above, that point of control, that red line, 50% of that bullish candle. We can get it back above there. We can maybe build more momentum to go to the upside, but it's going to come down to the close, right? That was the first 1 minute of this new candle. So it's good open. It was a great open. We opened bullish, but it was that bearish momentum, but we got a good wick. Higher low, protecting the low of the day. And now we got a nice bullish pin bar, maybe hammer candle. Maybe we can get it back up, trade above here. Maybe we can break out. Who knows? Like sometimes this is where if I'm in a trade, I might add another position if I like what I see, right? But you see how it came up, lower high, they rejected it back down. Okay, so sellers are protecting this area as well. And then the volume is right back in the consolidated zone. So no real big move, but we got big news coming out in 3 minutes. And then that's where we're going to get an explosive move. It's either going to be an explosive move to the upside or it's going to be an explosive move to the downside. So I'm in this trade going into news. I don't know if I'll still be in it into the news, but we'll see. And then you might see me get stopped out. I'm hoping to not get stopped out prior to the news because sometimes it comes down, stops you out, then it's gone. But here it comes back down. So lower high, back down. If we can't hold that opening wick, then that's it. I'm getting stopped out. Okay, so are they protecting that in this candle? Again, when it came down, they're pushing it back up, but I need more asking to trade more up in here. The sellers are hitting the bid down in here, and at the end of the day, I'll get stopped out there. It's a pretty tight stop loss for Wall Street market open. Okay, this is where I normally keep my stop loss just on any time trading in the day in a consolidated zone. So you can see I'm not risking anything on this basically. Gold is going. Yeah, gold was set up beautiful. Right there, guys, that could have been a nice entry point. When it came right up, closed 50%, pull back right there. That's a good setup. That higher low leg and right there breaking through everything. Gold was beautiful. Sometimes, guys, that's why I say stay with one security. When we were following it the entire time, you stick with that security, you follow that volume. You're with that volume, and then you can make some good trades. That's why sometimes I don't switch securities when I'm trading personally by myself. I stick on one security and I watch it like a hawk, and I stay with that. If I make money off of it, I know where it goes, where the resistance is. If I get stopped out, I understand why I got stopped out. I learn from it. I follow each individual candle, how it opens and closes, and I follow that volume. When you start flip-flopping from one chart to the next chart, to the news, to this, to that, you're going to start confusing yourself, and you're going to miss out on critical clues. Okay, guys, 1 more minute to go into the close. NASDAQ looking good, kind of created 2 bottoms there. Body of volume, wicks below there, coming right back up. So this could be a second leg coming right back up on NASDAQ, okay? Where it came down, 1, there's the neckline, 2, came down right there, bottom, second bottom, coming back up. So let's see how it's like a W, but we got to get those higher highs continuing to break, maybe close above here, then to continue push up. However, it could just go down with the news, you know. They could be trapping buyers and then they just dump it, okay? So I have to really watch this, guys, because I'm in a live trade here and going into news, which I hate because I know what they can do. They can come down, definitely take out all the stops and then take it back up, or they can come up here and could be a good bullish move. You know, I'm in it, so hopefully maybe that could happen. But here we go. Get ready. It's going to be volatile. So I've got to put my stop here. Here we go. They gapped it at the opening price. Okay, it's not too volatile yet. I thought it would be a lot more volatile than this. Okay, so we're holding a higher low news candle. We're moving our way back up. Okay, NASDAQ is now at the neckline. Okay, that's that nice double bottom. Beautiful. Could get that impulse breakup, but it's got to fill that big wick. Maybe we got to wait for some volume to come. Again, that rejection right there, that nasty rejection coming back down. So it's a spin top candle. The body is still filling. We got buyers asking to trade near the highs. We haven't really broke down anything down below us. Still has a higher low. Okay, so it's still, you know, it's a spin top indecision candle. Shit. Come on. You see where NASDAQ is struggling right there at that neckline. Okay, so we're continuing to push up. I would love if I get a blue body and volume closing back above here. Then we could really strengthen this depth of market and get more buyers starting to ask to trade up here. And then we've got some clean volume to fill to the left side. If we can just fill these previous wicks, we could easily fill back up to that big bearish body up there. Okay, and then that would be that zone of interest. But we're failing to make higher highs. That's what's concerning me. Okay, so that's the first 2 minutes of the news. Notice how I haven't even flipped onto the news. Okay, I haven't even looked at Forex Factory. I'm just following the volume, because if I take my eyes off of this, I might miss something. I can see now the numbers are coming out. Okay, so US S&P Services PMI actual 55.2 from the forecast 53. 52.8, pretty good. Okay, so if you we just quickly glance at it so you can see what Forex Factory is showing. Okay, right there, Flash Manufacturing PMI came out below 50, but the Flash Services, really good numbers came out there. Okay, okay, so we're asking trade back above here. 2.5 minutes have gone by on the candle. This is kind of like the second half now of a basketball game. It's halftime show. We got the cheerleaders dancing, and now we're back to the second half ball game. So the blue team is winning, and let's see if we can continue to create some higher highs. But more importantly, if we can create a higher high and close with body of volume above here so we can build off of this, so we can build a new point of control. Look at NASDAQ filling right through that entire, that's a nice fill. You got that wick fill, and it could create a new high and get up to that daily point of interest, okay? So we got the good move on our side here, okay? So coming up, guys, that's 25 pips, okay? Up to here is 35. We created that higher high. You can manage your stop loss if you like, wherever you're at, okay? I'm going to a break even now. Break even up 30 there. I'm going to take out 80% at that block up there, okay? I'm grabbing 80%. Right there at 35 pips and keeping 20% running, okay? So right up to that block, I said, okay? right up to there. It's a block for a reason on my chart. Okay, so I don't feel bad taking money out of there. Yes, it could continue to break and continue to go, but it could also get a nasty wick and come all the way right back down. Okay, but let's see. We got 20% running still. We're still invested. Let's see now. Follow this body of volume. Where will it close? Can we do the Fibonacci and figure out a point of control for a pullback? Guys, remember what I said, a nice clean imbalance filling up to this. Guys, all we had to do was fill that. We got the Wall Street volume. This could pop right up to that daily or hourly position. That could be about 50, 55 pips up there. Maybe on this candle alone. We got 45 seconds to continue to drive on this. Okay? Not bad. Hit the likes on YouTube. Nice little scalp buy with zero draw. No, I'm not going to say that on this one. Zero drawdown. There was some drawdown, almost stopped out. I was talking about that NASDAQ, that buy above there was zero drawdown if you took that impulse move. But guys, intuition, the way how it's building, pattern recognition, down, neckline, second bottom, break. You got the volume, the news, and then that's a clean imbalance fill. So sometimes intuition, following the volume. 5 seconds going to close. Are we going to close relative right near the high? Are they going to reject it? Okay, so we close close to the high. Right below that zone, it opened bearish, pullbacks. Where's our cut line? Here's my cut line. Okay, there's my cut of open close where half is, but I don't want to guess. Fibonacci tool, open close of that bar right there. Ooh, Ron was pretty close at the cut. Okay, when price is getting too high, you got to cut it. Okay, and then there is my now bullish point of control. If it pulls back in there. Unfortunately, if it pulls back at the bottom of that point of control, that's my break even. But if it comes down, maybe we're protected with another push. But we already got a shallow pullback. We're pushing right up. All we got to do is just continue to break this high, ask to trade up here, and we're driving to that hourly resistance. We can pick ourselves up 55 pips. And then if it continues, where's your next 5-minute interest point? I would say like right around here. Okay, a little bit below that zone. A little bit here, but 50% of that bearish candle and already that retest candles. So I'm saying right up to that red line, guys, 44,830. You know, guys, we're looking at 85 pips up there. If it can get up there without retracing back down. So if we get this momentum continuing to push. You see, guys, don't play games with NASDAQ. It came right into and impulsively broke out of the red zone. They closed it there, and now it's coming back down. That's what I mean, guys. You know, when this candle was coming up to that zone, that's why I said, guys, I'm closing out 80%, leaving 20% running, because, you know, I don't play games like that. Okay, I'm a zone trader, line-to-line trader here. Okay, but we got continuation right up to the hourly. Okay, so I'm going to take out another additional 10% up there. Guys, I'm already halfway hitting the daily goal. Okay, so I'm taking out 10% right there, and now I only have 10% running. Okay, so I hope that it can continue to go up to there. I hope that it can hit that next hourly position and turn into over 100 pips, but I'm not going to leave money on the table. I'm sorry, guys, I don't do that. I work hard at this. I come in every morning, not just with you guys, but I spend a lot of time on the charts by myself. Like, this is how we got to pay the bills. I don't leave money. Obviously, I want this trade to continue to go as high as it wants to go. But look at your big bearish daily candle you're battling. Okay, that's a beautiful move, and it could come tumbling right back down, just like NASDAQ. So don't get greedy. Don't get greedy. As soon as you start getting greedy, the market will humble you real quick. But it's up to you guys. Like, that's why I leave 10% running, 20. If it wants to go, that's my my greedy runner. Let it go. But the bulk of the move, I want to put that money in my pocket. Okay. Gold. Wow. Okay. So did that body close above? Yes. Did you flip that zone green? I hope you did. Did we push, initial push, right? But then go back above. Did we close above this zone? Yes. So it's green. See, now we're building our depth of market like building blocks below us. Okay. And now we're pushing against right there. But now that's a yellow line. Like, we broke through hourly, but this is a heavy area. That's your hourly. So right there, you know, a little bit above, a little bit below to those bodies, I would that would be an area of interest. If it comes all the way up there, that's where it could come up, and then they push it down. If you're in a buy there, I would definitely be securing a little bit, right, like above here, because you got that big bearish candle. This could just come up and then lower high, and they continue to drop it right back down. Okay, guys. Guys, did I explain this properly to you guys? I hope I did. Okay. And I was very, very close to getting stopped out. I'm telling you, just by a few points, I would have been stopped out. But I placed my stop loss strategically below those lows, below that lowest point of the day. And it was a pretty tight stop loss. Okay. So if you remember, like I entered here, like on there, I entered, but my stop was just down there. Okay. So 50 pips. And now it's moving possibly. Okay. So it's 60, 70. But up to there is kind of 1 to 1.5 on your money, whatever. I don't kind of trade ratios or like R&Rs. I trade ticks, points, pips, whatever you want to call it. Wow, okay, because look at that big bearish engulfing candle coming back down. So that's what I mean. It came up, but you got a daily point of interest and this red box where it impulsively broke there and they dropped it, impulsively broke there and they dropped it, impulsively broke there, and now they're dropping it. Guys, this could be like come down here, close, and we're taking a low day, and NASDAQ is going to be a selling day today. Okay, so now 50% of that big bearish candle is somewhere like right around this red zone, like right up here, you know. Okay, we got rejected hard too at the hourly point of interest. That's why I told you guys I was closing out 10% up there. Now it came back down, but you got a bullish ignited candle continuing to open, but you got that big exhaustion wick. It's not a short wick where it can continue to drive, and it's all being built below that hourly resistance. So they're already lower high and pushing this thing back down. Okay. Guys, today was a choppy morning. Like it was choppy like all through here. NASDAQ is still choppy. It's really, really tough to make. Guys, just continue being patient. Let NASDAQ build up, you know, and then you might get better trades in another hour. Let things develop, okay? With gold, it was rather choppy when we started the call, prior to the call, 5, 6, 7. That's where we started, okay? But then it started to really dump, and then it started to really move up, okay? So it's good. If you're looking for now, you want to look for pullback buys, either here, either in here, but back down here where it all started, that's your proper area. That's your daily position, the yellow line, right? So where's the best location to buy gold? Down here. This is the second best. This is, yeah, it might be just a minor retracement, go back up. That might be a short scalp to test this box, but this one might not hold. And then, you know, you got to go deeper down into the depth of market. The deeper you go, the stronger the demand, right? Okay. So that's it, guys. The runner, it got that 10% ahead, got stopped out right there. Okay. And that's that trade. So you see, guys, if I didn't take out any money, I would have not made anything. So I know I want the trade to continue to go up and up to the sky, to the moon, but things don't always operate like that. So, you know, we're intraday trading. We're scalping the markets. We can't turn this into a 500 pip unless the whole entire daily candle flips and then we're driving. Nice move like that. Grab yourself 50 pips. Okay. You're on your way to hitting 100 per the day. Okay, 50 pips is a good start. You know, it's like hitting a double in baseball. You get on base, you hit a double. Now, maybe if you want to look for another trade, you know, let's say you give up 25 pips on the next trade. You're still up 25 for the day. Then you got to look again, singles and doubles. You never know. Maybe you'll hit a grand slam. You'll hit one out of the park and you get a 100 pip move. But again, look at how now NASDAQ, just pay attention. I would get rid of this inside zone right now on NASDAQ because you got bigger volume now. It's trading from this green box to this red box, from this red box to this green box. I would just place now just a red line, like right there as a point of interest. But I would be maybe focusing on now this green zone is still building. It's got higher lows off the lowest point of the day. It is ascending, but can we get 5-minute volume closing above this red line to build, to continue come up here and build out? Or if it comes up here, are these sellers from this bearish candle protecting this zone and pushing this back down? And if it goes here, you sell. And then we'll probably come down, break the low of the day, and drop even further. See right there? That's why sometimes where, you know, you enter, you get stopped out at break even, and then it goes without you. It happens. but you got to understand then don't go directly to a break even. Instead of a break even, maybe leave 5 pips of breathing room. Yes, if you do get stopped out, you lose 5 pips, but on a runner, you should have already scaled out a majority of your profit. Okay. And now we're right back up driving. Okay. So you see that pullback came back and took out all the opening buyers at Wall Street, which was me. So you see how the markets work? They come down, but I played the game with the market makers today. I got the last laugh. They took me out. I only had 10% remaining. 90% got taken out on the previous move. So market makers can play. I can play too. We can play with them as well. Okay, it's a game of psychology. They try to outmaneuver us. We got to think of how to outmaneuver them. They engineer the markets. They're financial engineers. We got to teach ourselves reverse engineering. Okay, there is such a thing as financial reverse engineering. I've been studying that for multiple years. Whatever they do, I try and reverse the move on them. Okay, you mix the game up with them. Yes, we want to trade with them, but we also got to reverse engineer some moves as well. Okay, guys, now we're going into 10 a.m. Just a recap, 10 a.m. Any news coming up? Okay, we went through we got new home sales coming up in right now. I'm curious to see if the U.S. has got more than the forecast. I'm curious to see that. Gold. Okay, so gold now is pulling back into that zone. So like kind of if you want to go for a quick, scalp buy, this might be your opportunity. This candle just opened up. It is bullish. It's back in the zone. It may retrace back up to here. Like if you were to go and buy, come back up, maybe fill that wick. You're testing 50%, maybe up there. And that's what it could just be. It could just be a move that came up, down. Let's say it comes back up, maybe up to here or here. But you got to recognize that could be a double top or lower high, and then they drop it right back down. Okay, so if it builds here and you got enough buyers here and it's consolidating, yes, you will get that leg up. It might not create new higher high, but maybe you can scalp yourself from here. There's 25 pips. There's 30. Up to the top is 40. Okay, but then you could go up in profit and then they drop it right back down on the next leg. So, but that was your pullback entry. If you wanted to buy this high point, now you're getting a deeper discount. Remember what I said? This one was just the shallow pullback. This is a better zone. This is the best zone down in here. Okay, so they're all in levels. They're all, the stronger they are, the deeper it goes. So when it comes here, use a feeler trade, test it out. If it comes down here, you can bump it up a little bit. If it comes down here, that would be your prime time. That would be the best area. Double bottom at the lowest point of the day. That started this nice leg. Okay. Sorry guys, I'm starting to lose my voice here. There goes Miss Jones. Wow. So after that tap, it's gone. Okay. So NASDAQ today is a little bit choppier. I know I always joke around, NASDAQ is shitty, this, that. I just do that to have fun in the group but NASDAQ right now is really tough to trade. Okay. If this was US 30, I would say the same thing. This is very difficult. This is tough, guys. Stay away from NASDAQ for the time being until you get some more confirmations. US 30 is real clean. US 30 is clean. We broke out, closed above, it retested properly, came back up, and we're driving. Okay. So, it's hit or miss with sometimes when you're picking which security you want to trade. That's why I stay consistent with US 30 majority of the time when I'm trading throughout the day, guys. But that's it for me, guys. I honestly hope someone learned something today, took something positive from today's call. I know we didn't do as much live trading, but education is very powerful, guys. There's not a lot of educators out there that teach financial education. That's what we do at SST. That's what I want to be known for, and Dave at SST, is our financial education. I don't want to be known about all the live trades and things like that. I don't really care about that. To me, it's more important that you guys are learning, and we're learning daily. And we're consistent at this, and we're showing you guys how the same stuff over and over and over plays out. You just got to have the right mindset, guys, the right risk management, think positive, think that you're going to make money, not just today, but 3 years down the road. No one looks long-term anymore. no one thinks long term. It's even the young generation, they just think for tomorrow. If you're 18 years old, if you're 20, 25, 30, think where you're going to be in 10 years, 20 years, 30 years down the road. And this is a process how you can get there. It is a process to financial freedom. There's some traders in our group at SST that are financially free. I'm proud to say that. But they work their asses off. I worked my ass off. Dave worked his ass off. You guys work your asses off. But put the time in and get the results out of it. Don't half-ass this, guys. You half-ass it, you're going to get half-ass results. You play games, you gamble, you're going to get results of gambling. You're not going to win. Go to a casino and ask any gambler there if they're winning. No, they're degenerate gamblers. They're in there with those slot bandits putting their last quarter that they have in there, and it's sad. It's because they got addicted to it. This trading can turn into a nasty addiction too. But that's why, guys, we stress risk management is the most important thing in trading. Forget about the technicals, forget about point of controls, forget about point of interest. That shit means nothing if you don't know how to control your risk in a day. I'm telling you the honest to God truth. It doesn't matter how much you know about fair value gaps and this and that if you don't know how much risk to take on in a trade. Okay, so all of those things are very important, guys. I had a blast today. Join us again tomorrow, Friday at 7 a.m. Guys, in Discord, wow, guys, take a look at that sell setup. Okay, 44,900. Look at that liquidity grab right in there, and then the nasty drop. Congratulations, guys, for those that took that sell earlier. Gold, beautiful opportunity. 3355 driving right now, 160 pips. Wow, very nice, guys. Okay, right there, that was that trade setup, that buy signal, and driving, guys. Don't sleep on SST's signals. Don't sleep on our trade ideas. They are powerful. You just got to get accustomed to how we trade them. But the charts are provided. Trade management is provided. It's consistent. It's daily. It's all about market conditions. If there's good market conditions, you're going to get some trade setups. If the markets are choppy, it's hard to look for setups. We don't just look for setups just to say we look for setups. We do everything with precision, right? We try our best to do everything. It's not hard in a financial market to do this and stay on top of this shit daily while living your life and doing other things. Dave and I are very busy. We got a lot of things going on in life, and we're still consistently here with you guys on a day in and day out basis, still providing. So we appreciate you guys. We support you guys. We give back. Guys, there's going to be a winner. We'll announce, sorry, didn't do it, but we're going to announce a winner. We already gave away a $15,000 Fixify funded account to Isaiah and a 3-month membership with us straight off of YouTube. He's in our group now. And we're going to give a 1-week trial. From the last, I'm going to go back on the comments on yesterday because you guys did hit over 200 likes or 250. That was a promise, so we got to give it back to you guys. Someone will get that. But we want to continue doing giveaways, guys. What I like to do with someone in Zoom, okay, this is someone in Zoom. I want to do a one-on-one, 90 minutes with someone in Zoom. And I don't care who it is. Who in the group needs like a real, like kind of a one-on-one with me? Not just to talk about chicken and rice and dieting. I'm talking about who needs some serious help on the call. I'm willing to do a 90-minute call with someone in our Zoom. We'll figure out the time, but who deserves it? Like, I don't want to be the person that picks out of the group. Who deserves it and who wants it? Veronica, you need help? I'm there for you. Can you send me a message, Veronica? Can you email SST, stocksnipertrading@gmail.com, or on Discord, send me a message, Veronica, and we'll set it up together, and I'll do my best to help you out with whatever questions you have. I'll be there to answer them, but it's a way how we can give back. I want to do these more on a regular basis. Soon we'll do these with someone on YouTube, but we show priority to our snipers in Zoom and Discord, okay? Veronica, just message us and we'll set that up. But yeah, congratulations. So I look forward to that, guys. Guys, I had a fantastic call. Have a good day, everyone. God bless. Stay positive, and we'll see you guys tomorrow morning. Join Dave on the post session. I don't want to keep too long because Dave's going to start up and have a little bit of a break. I gotta go. I'll show you some before and afters. Yesterday, guys, I took out all of the tile out of the kitchen, front foyer, and the bathrooms. Today, I just gotta. Now it's the dirty day. We gotta get rid of all the cement there. The dusty day, clean it up. I gotta shave a little bit off of the plywood to get it because we got bigger 24 by 48 tiles. So they're big guys, and they're so I gotta get to work. You know, I gotta get to the boss. My wife is waiting. I gotta get to work, guys. I gotta go back to the real work. This is just part-time work over here, but we got to go to the real job. We got to keep our wives happy. So I'll see you guys. Have a good day. God bless, guys. Congratulations, Veronica. And look forward to talking to you. Take care, guys. A1 everything. Peace out, bro. Captain Boom, take it easy. Dale, thank you, guys. Guys, I appreciate you guys. Have a good day, everyone. Thank you, guys. Everyone on YouTube, please consider hitting the like button, subscribe to the channel, hit the notifications, join myself, join Dave, join the SST community. And we really say that when we say you join SST, you can take your trading to the next level. We do believe in that. Okay. So join the team, join a winning team. And it's a fun team. We're like a family community here. We all know each other. We all go through ups and downs, and we all have fun together at the end of the day. Okay, guys, have a great day. Enjoy your day today. Thanks, guys. I had fun. Enjoy your time with Dave. See you guys. Have a great day. And again, congratulations, Veronica. We'll set up a time that works best for both of us, okay? Have a good day, guys.
Hey guys, good morning, welcome to the live session of Stocks Network Trading. My name is Dave, guys, my partner is Ron. Let's get down to business here, guys.
In on US 30, sell. Okay, I'm jumping in. Guys, that's a 100 pip drop. Yes, we caught it. Hey, guys, 200 pips, please secure.